And welcome to the 7th hearing of the U.S.-China Economic and Secure Review Commission's 2023 annual report cycle. I want to first thank staff, many of whom worked on several other hearings, and so I appreciate the heroic effort that was involved in getting this hearing set up. So thank you, Jonathan and Daniel in particular. And Charles, I don't see. Many of us have watched China for years, appreciate that the magnitude of the economic challenges China must address now are not new. Rather, they have been worsening for years and were amplified by COVID and the poor policy choices made during that time. Notwithstanding the CCP's push for Chinese households and non-state businesses to drive recovery in 2023, household consumption has been cautious. Government lending practices continue to favor unproductive state-owned enterprises, higher-performing non-state sector, at the expense of higher-performing non-state sectors. In most cities, property prices have plunged, and business confidence has eroded as deflation sets in. 2 years ago, we reported on the rising concerns related to debt and demographics. Those challenges are only intensifying. Over the past decade, China's banking sector has grown from 9 trillion to a staggering 56 trillion in assets. Those assets are somewhat questionable. By the end of 2022, China's debt to GDP ratio exceeded 297%, more than double what it was in 2008. This unprecedented expansion in credit largely flowed into a building boom that contributed roughly 30% of GDP. More troubling in terms of the human dimension of the problem, in terms of economic instability and political confidence in the CCP, roughly 70% of household wealth is tied up in the real estate sector, which experienced across the board significant declines in sales, starts, and land purchases for building. China simply cannot sustain the policy approach of credit expansion, nor will it be able to continue to shield unproductive entities from default. After 20 years of relying on debt-fueled stimulus, China confronts twin challenges of lacking viable infrastructure projects sufficient to stimulate growth, and developers and local governments overburdened with debt. Whether local governments and the opaque funding vehicles they create to raise money are stable and sustainable is very much in doubt. A recent report indicated 43 LGFVs failed to redeem maturing commercial paper. Was this due to a lack of investor confidence? Adding to these significant challenges, by mid-23, China's official youth unemployment rate had soared above 21%, at which point the party state abruptly stopped releasing data. Although transparency into China's economic data is vanishing, the country's economic weakness is now far too pronounced for the CCP to hide. For years, we talked about shadow lending as a challenge. Now the problem is shadow data. International investors cannot have confidence in buying stock on U.S. exchanges or directly investing in China if data are inadequate, misleading, overstated, censored, or withheld. Our fabulous witnesses today have deep and diverse expertise researching China's domestic economy and supply chain policies. I'm pleased that 4 or 5 have not previously testified before the Commission and bring forward new perspectives on key elements and outcomes of China's economic model. I'll now hand it over to my co-chair for the hearing, Commissioner Glas, who will introduce the panels and make some compelling remarks.
Thank you, Commissioner Cleveland, and good morning, everyone. Today's hearing will call into question the health of China's economy and the overall implications for the CCP's influence over technology supply chains. The party's state dual circulation strategy aims to eradicate its own external vulnerabilities while increasing the world's dependence on Chinese technology. Today, U.S. policymakers are moving to address some of the risks stemming from supply chains that are overly dependent on China. However, much more remains to be done. In May of this year, the Biden administration announced that the United States aims to de-risk its relationship with China, focusing U.S. policy on fortifying areas core to U.S. national and security interests. Congressional action through the Inflation Reduction Act and CHIPS and Science Act took major steps towards diversifying U.S. supply chains in semiconductors and clean energy technologies if implemented properly. Nonetheless, these efforts are still early, and further action is needed to reduce U.S. other vulnerabilities to Chinese control over critical supply nodes, from pharmaceuticals to green energy. The recent spike in Chinese electric vehicle production and exports exemplifies the party state's ongoing efforts to expand control over crucial segments of global production. U.S. businesses are discussing options to de-risk their own operations, but China is simultaneously moving to ensure U.S. companies and investors remain intertwined with Chinese markets. While a 19% drop in trade with China and a nearly 90% drop in foreign investment in China in the previous quarter may be seen as a signal of decreasing reliance on Chinese markets, overseas investments by Chinese companies simultaneously surged. Chinese companies are looking to offshore production to other countries in Southeast Asia and even Mexico, evading tariffs by locating production in other jurisdictions. They are also continuing to export through other secondary markets to avoid tariffs and also customs scrutiny under the Uyghur Forced Labor Prevention Act. As a result, even where trade data shows a decrease in direct U.S. dependency on China, the true value of Chinese content in U.S. supply chains is much higher. This hearing provides an opportunity to consider the kinds of guardrails that businesses can follow to address these increasingly complex supply chain risks. Before we begin, I'd like to remind you all that the testimonies and transcript from today's hearing will be posted on our website. I'd also like to thank the Senate Committee on Health, Education, Labor, and Pensions for securing this room for our use today, and the Senate Recording Studio for their assistance in live streaming this event. We'll now begin today's hearing with our first panel. I've had the honor to introduce our first panel today. Our first panel will provide an overview of the economic and financial challenges confronting China today. We will also explore how these issues impact the global economy and how investor sentiment toward the country is changing. We'll start with Dr. Logan Wright, who is a partner at Rhodium Group and leads the firm's China market research work. His testimony will provide an overview of China's economic and financial challenges. Next, we'll hear from Mr. Nicholas Borst, who is appearing virtually. Mr. Borst is Vice President and Director of China Research at Seafarer Capital Partners, and he will discuss China's fiscal challenges and investor sentiment. Finally, Dr. Zongyuan Zoe Liu, and I hope I'm pronouncing that somewhat correctly, will provide her testimony, and please correct me. Dr. Liu is the Maurice R. Greenberg Fellow for China Studies at the Council on Foreign Relations, and she will address the role of state-owned capital, particularly China's sovereign wealth funds, in financing the country's domestic and overseas ambitions. Thank you all so much for your testimony and appearing before the commission today. We all look forward to hearing your remarks. I ask all the witnesses to please keep the remarks to 7 minutes. Dr. Wright, we'll begin with you.
Thank you, Commissioner Cleveland, Commissioner Glas, all the commissioners and staff for your kind invitation to testify at this important hearing today. My testimony focuses on 3 principal arguments related to developments in China's economy and financial system and their implications for the United States. First, the severity of China's ongoing economic weakness is still widely underappreciated, and the United States no longer faces a growth challenge from China. Beijing is no longer an economic pacing threat or likely to overtake the United States in any significant measure of economic power in the next 2 decades, assuming U.S. growth continues at roughly current rates. Beijing will never be able to make a credible claim to global economic primacy. The challenges the United States faces in strategic competition with China are highly significant, but they will not be impacted by marginal changes in China's economic performance in the years ahead. China's current economic slowdown is structural in nature. Simply put, most of the factors that contributed to China's rapid growth over the last 2 decades cannot be repeated in the next decade. These include an expanding labor force, unprecedented credit and investment growth, a booming property sector, a one-time buildup of infrastructure, and a constructive external environment. Most analysts agree that growth in China will not recover to its previous rates, but there's still considerable disagreement about how severe the slowdown will become. and the implications of those changes for the United States. One of the least understood aspects of China's economic record over the past decade has been the linkage between the rapid growth of China's financial system and its economic performance. China's current economic slowdown is structural primarily because the credit and investment expansion that took place from 2008 to 2016 was also unprecedented. This was the largest single country credit expansion relative to global GDP in over a century. Credit growth of this magnitude not only powered significant volumes of local government investment and property construction, but most importantly, it provided a shock absorber insulating China's economy from bankruptcies, defaults, and unemployment. And that credit expansion has ended. China's economy, as measured through GDP in 2022, is around 2/3 the size of the US economy in dollar terms, 65% at current exchange rates, even based on China's suspect official data. Given China's long-term economic challenges, there is no realistic scenario in which China's economy becomes 150% or 200% of US GDP in the future, surpassing the United States by a wide margin. The United States will continue to be challenged by China's military buildup related to Taiwan and the South China Sea, China's outsized and politicized influence within specific next-generation industries and manufacturing supply chains, economic policies artificially boosting Chinese firms' competitiveness, and behavior to influence democratic political systems around the world. Those problems are exactly where U.S. policy and legislative efforts should focus. But none of these military, diplomatic, or ideological areas of strategic competition with China will be changed by marginal adjustments in China's economy from current levels, even if China were to improbably reach the level of US GDP. And China's slow pace of economic growth is more likely to weaken Beijing's capacity to confront the United States and its allies in these areas, rather than rapid economic growth boosting China's capabilities over time. Second, Beijing is attempting to downplay public recognition of China's economic slowdown, both inside China and internationally. The most important propaganda message for China's leaders related to the economy is that the argument that China's economic rise is inevitable and that this will reinforce China's rise in great power status. Chinese leaders believe they can influence the narratives about the economy through conventional domestic propaganda, but also by restricting the availability of economic data and stories they dislike. China's economic data, meaning the data points likely to generate media coverage such as GDP growth, should be understood as critical elements of China's internal and external narrative management concerning the economy. Tighter controls over data and censorship of discussion of China's economy should also be understood as reactive responses to real uncertainty among economic actors in China about Beijing's policymaking. The narrative about China and its economy is important to the United States. The success or failure of Beijing's policymaking in an estate-driven economic model determines not just the relative performance of these two competitors, but the attraction and hence the global soft power of the Chinese system and its ability to displace commitment to traditional liberal democratic and market economic norms. Third, the property and local government debt crises in China are intrinsically linked. As credit growth slows, investment growth will follow, and significant proportions of that credit and investment have been channeled into property construction and infrastructure over the past decade. Property developers delayed a long-anticipated slowdown in the industry by relying upon increasingly risky forms of financing, such as the proceeds of housing sales before actual construction took place. This introduced a Ponzi-type element into the financing of China's property sector. As sales suddenly declined, a trend that was exacerbated by lockdowns in major cities in 2022, property developers not only struggled to complete construction of homes they'd already sold and promised to deliver, but also stopped buying new land from local governments. Local governments' fiscal revenues are heavily dependent upon these land sales, and the sudden loss of revenues has made it far more difficult for localities to service debt accrued during the last decade, as this investment was not funded directly by fiscal spending. The property sector's adjustment has been severe. New housing starts are down over 60% from their peak, and there's no easy solution for the local debt problem without changing China's entire growth model to make it less dependent upon investment. The structural slowdown in China means that the United States can be more narrowly concerned about the national security implications of specific economic transactions, rather than whether or not a particular action will help or hurt the Chinese economy as a whole. There is a significant national security concerns related to the transfer of advanced technologies with military or dual-use applications, but there's little at stake for the United States in U.S. or allied investors buying stocks in Chinese consumer-focused companies or Chinese government bonds. Most trade and investment activity between the United States and China is mutually economically beneficial and poses no national security concerns. U.S. commitments to free market principles are a valuable asset that facilitates greater alignment among our allies and partners, many of whom will be far more reluctant to impose trade and investment restrictions upon Beijing. Given the challenges that Chinese behavior and economic statecraft poses, de-risking from China's economy is widely supported and necessary. But in a decade in which China will slow significantly independently of any action by the United States, we can more confidently keep the limits around U.S. and allied economic engagement with China narrow. Thank you.
Mr. Borst, is he online?
Yes, can you hear me?
Thank you.
Well, thank you so much.
Go ahead.
Thank you so much. And I'd like to start by thanking the commissioners for the opportunity to participate in today's hearing. I will relay my observations from reviewing China's recent economic data and visits to 10 different Chinese cities over the course of this year. The Chinese economy is currently in a weak position. While the economy performed well in the early years of the pandemic, growth decelerated sharply in 2022 due to lockdowns and a severe decline in the real estate sector. Since Beijing abruptly reopened the country at the beginning of the year, the economic situation has improved somewhat. However, activity is substantially weaker than many of the projections made at the beginning of 2023. China has not only failed to have a reopening boom, it is now in danger of losing economic momentum. The current state of the Chinese economy can be primarily attributed to three policy decisions made over the past several years: a failure to moderate the real estate deleveraging campaign, a crackdown on the private sector that has damaged business confidence, and a failure to adequately prepare for the post-COVID era. Equally important, the Chinese government has backtracked during this period on addressing fiscal imbalances between the central and local governments. This has created new financial risk and further hindered the country's economic recovery. The first policy mistake was the real estate deleveraging campaign. In 2020, the Chinese government decided to push ahead with a major restructuring of the property sector. A primary focus of this effort was to force property developers to deleverage their balance sheets. However, these policies soon created a severe financing crunch across the entire industry. The riskiest and most over-leveraged property developers ran into trouble first, but the financial stress soon expanded to the entire sector. No longer able to obtain financing, property developers began pausing work on new housing projects. Many Chinese home buyers who had pre-purchased apartments refused to make mortgage payments, fearing that their homes would not be completed. The government has since tried to unwind many of these policies. However, the property market remains weak and financing challenges for real estate developers have not been resolved. The second policy mistake was the crackdown on the private sector. In late 2020, Chinese regulators initiated a sweeping and unpredictable campaign that became known as the regulatory storm. Chinese social media and e-commerce platforms were forced to restructure their business models. Certain industries, most notably the private education sector, were nearly regulated out of business. China's creative industries faced stringent new censorship rules and a freeze on content approvals. The retail, payment, and consumer lending industries were put under new regulations that fundamentally crimped demand. At the same time, the Communist Party redoubled its efforts to establish party organizations within private companies and exert greater control. The cumulative effect of these new policies has been devastating for many of China's leading private firms and has contributed to the sharp decline in private investment. The third policy mistake was the lack of planning for the post-pandemic era. At the end of 2020, it became clear that effective COVID-19 vaccines were possible and that countries needed to begin adjusting their approach to the pandemic. However, China held steadfast to a zero COVID policy that effectively sealed it off from the rest of the world. While most countries unwound pandemic controls in 2021 and 2022, Chinese authorities engaged in a series of strict lockdowns and quarantine measures. The economic damage from these lockdowns was tremendous, especially to small businesses who received insufficient government support. This has had a direct impact on high levels of youth unemployment today. And even though pandemic restrictions have now been lifted, consumers are understandably cautious and unwilling to increase their spending. Perhaps most importantly, Beijing has failed to address local government debt problems during this period. The severe fiscal imbalances between the central government and local governments are at the heart of many distortions in the Chinese economy and are the most pressing financial risks facing the country. Local governments have borrowed extensively, both directly and through off-balance sheet vehicles called LGFVs. While some of this investment may be going into useful projects such as infrastructure, there's also likely to be a significant amount of waste. Further compounding problems, most LGFVs have limited cash flows and must rely on new financing. To remain financially solvent, LGFVs must either continue to borrow or receive financial support from local governments. However, the financial condition of local governments has deteriorated due to lower land sales and high levels of pandemic spending. This has increased the risk that local governments may no longer be able to bail out struggling LGFVs, leading to an increase in defaults. China's unresolved debt problems mean that the economy is likely to continue slowing. Beijing's past approach has been to muddle through by providing support to struggling borrowers and relying on rapid economic growth to lessen debt burdens over time. However, this is unlikely to work well this time. The economy's slowing trajectory means that China cannot easily grow its way out of debt. Additionally, local governments are constrained in their ability to support the economy due to highly indebted balance sheets. If China neglects to undertake important fiscal reforms, it faces the risk of a prolonged period of slow economic growth. Fiscal reform could be an opportunity to set China on a path towards more rapid growth and address many of the core imbalances in the economy. However, I believe this course of action is unlikely given that many of the adjustments required directly conflict with the ideological priorities of the Xi Jinping government. While these issues are primarily domestic for China, I believe there are implications for the US. The economic challenge from China has changed. China's economy has slowed and it is unlikely to recover its rapid growth trajectory. The Chinese government is likely to be intensely focused on efforts to address its own internal economic challenges over the next several years. The party's efforts to exert greater control over the private sector have damaged some of the most dynamic and innovative parts of the Chinese economy. And Chinese local governments will have fewer financial resources to support Beijing's policy initiatives and stimulate the economy. China's economic slowdown, combined with the strong performance of the American economy, provide U.S. policymakers with a strong negotiating position. China needs foreign investment and access to overseas markets to sustain its economy. China is still one of the United States' most important export and investment markets, and improving conditions for American companies doing business with China should be a priority. The current moment is a favorable one to seek greater market access and other reforms that will directly benefit American firms and boost exports. Thank you.
Thank you. Dr. Liu?
Thank you, Chair Cleveland, Chair Glas, and commissioners, as well as all the staff members of the U.S.-China Commission. I really appreciate the opportunity today to testify in front of you with regards to the role of China's sovereign funds in finance the Communist Party of China's global ambitions. For the past 2 decades, China's sovereign funds have played a significant role in China's economy, mitigating financial crisis, and tempering exogenous shocks. They have supported China's industrial policies by financing the state's procurement of strategic overseas assets, bankrolling Chinese enterprises' mergers and acquisitions abroad, and sponsoring the development of indigenous Chinese technological startups. I would like to make 3 points today. The first point is that while the Communist Party of China first leveraged the foreign exchange reserve to establish such a sovereign funds, for what that first time was to address a domestic financial crisis in the early 2000s. But despite the first time was crisis-driven, since President Xi Jinping came to power, the Communist Party of China and the Chinese government has been more proactively using foreign exchange reserves to finance its global ambitions. And my second point is that the Chinese sovereign funds have evolved and changed their investment strategies in response to enhanced investment screening. In areas where direct investment became more difficult, they choose or they have resorted to establish joint ventures and partnerships to mitigate scrutiny risk. And my third point is that China's sovereign funds and their overseas assets are not necessarily uncompromised strengths, but actually they can be strategic vulnerabilities. And this means that the Chinese government is likely to advance the development of alternative non-dollar-based financial infrastructure and financial system to reduce their strategic vulnerabilities. Now let me elaborate on these 3 points. The first time that the Chinese government leveraged its foreign exchange reserves was to create Central Huijin back in 2003. And at that time, Chinese banking system was crippled with non-performing loans. But since President Xi Jinping came to power and the roll-off of the Belt and Road Initiative, or the so-called BRI, has motivated the party to leverage China's foreign exchange reserves as a strategic financial power to advance China's overseas interest. Since 2013, the party has used foreign exchange reserves to replenish Chinese policy banks, establish several new sovereign funds, and these include the Silk Road Fund, China Latin America Production Capacity Corporation Investment Fund, China Africa Industrial Capacity Corporation Fund, and the Guoxin International Investment Corporation Limited. The Silk Road Fund in particular is a good example. It is created by President Xi Jinping to finance the Belt and Road Initiative, and has since then is not just invested in overseas strategic assets, but also financed Chinese companies' overseas acquisitions, including supporting COSCO Shipping Port in investing overseas port project. And on top of supporting China's overseas acquisition, Silk Road Fund has actually also received a second-time capital injection using renminbi back in 2017. And the purpose of using renminbi to recapitalize the Silk Road Fund was, on the one part, to strengthen its capital base. On the other part is also to advance the capacity of the Silk Road Fund, and through the Belt and Road Initiative, to broaden the renminbi's use through regional and multilateral frameworks. And this brings me to my second point, which is Chinese sovereign funds have evolved and changed their investment strategies over the years. In an area where direct investment become more difficult, they established joint ventures. For example, Silk Road Fund is the sole sponsor of a 2 billion China-Kazakhstan Production Capacity Corporation Fund, and China Investment Corporation, since 2016, has also been resorting to multilateral investment partnerships. And my third point is that Chinese policy thinkers, they have realized the strategic vulnerabilities that China's overseas investment has exposed them to. Therefore, they have learned the lesson from Russia's war against Ukraine, as well as the West's collective sanction against Russia. Therefore, the current policy debate inside China is not necessarily with regard to how to further diversify foreign exchange reserves, because diversification cannot diversify away systematic risk for the Communist Party. In this current scenario, it means a war, possible militarized contention with regard to Taiwan. Therefore, they are likely to further promote the development of alternative financial system that is not necessarily based on the US dollar. And I will stop there. Thank you.
Thank you so much. Do you want to?
Mr. Wright, I'd like to begin with you, just so that I have a very clear picture of what's at stake. In your testimony, you talk about LGFVs borrowing from banks, representing 76% of debt, and then bonds issued are 1.8 trillion, and then another number was the total debt is 7.45 trillion. Can you do sort of a cascade for me of sort of what's the total debt at the local level, what's bonds, what's loans, and what do you view as inherently riskier in terms of the overall economic picture?
Sure. Basically, total local government debt is around China's GDP, somewhere between 90 to 110% of GDP, meaning somewhere between 16, 17 trillion dollars. The riskiest part of that is probably what is happening in short-term payables, in privately placed notes, and in the corporate bond market. So short-term payables are 6 trillion yuan, so something close to $800 billion. Total local government interest-bearing debt is 54 trillion yuan as of the end of 2022. So something close to $8 trillion or so. And the riskiest part of that interest-bearing debt is the corporate bonds, which have been shrinking in duration and around 13.5 trillion yuan. Average duration on those LGFV debt is around 2.5 years. The remaining portion so in total, all of that LGFV accrued debt is about half of the stock, which is about half of China's GDP. So the remaining portion, there's an explicitly guaranteed by Beijing local government bond issuance that is explicitly issued. That's 36 trillion yuan as of the end of 2022. So that's about 30% of GDP. And then there's an unknown portion, which is stuff issued by schools, hospitals, other government-affiliated institutions at the local level that nobody really counts. That's probably also implicit. So roughly we're talking about 70% of GDP, or roughly $11 to $12 trillion in debt that needs to be restructured. And the problem with local government debt restructuring is not just the stock, but the flow. What happens not only when you manage the existing, obligations and prevent the immediate financial market risk on a wide range of assets that are perceived to be guaranteed in China's financial markets, but how do you more sustainably finance investment in the future at a lower rate?
And as you see it now, what entities are responsible for purchasing each of these pieces of the pie? Because in my pea brain, I just see this as the debt just keeps washing through the system, and the policy banks buy, and then they push it off on a regional bank, and it just keeps money washing through the system.
Yeah, my colleagues at Rhodium Group have done a lot of work on exactly where this concentration of lending is held within the Chinese financial system. So the most exposed would probably is not in the bond portfolio, but the loan portfolio. And around loans to LGFVs around 20 to 25% of the total loans in China's banking system. So it's quite a high level of exposure. And the banks that are most exposed are most likely to be city commercial banks. Within the bond portfolio, and so the smaller city banks that kind of serve as quasi-fiscal institutions to Chinese cities and towns. Mm-hmm. Among the bond portfolio, the highest exposure is among privately placed notes, privately placed LGFV notes, because those are shorter term in duration and we don't really have great visibility about where the holdings are. What happens in China's system is that there's still a shadow banking component where banks will sell products from third-party institutions that will then try to basically add leverage or obtain higher yielding assets in order to repay investors at higher rates. And LGFV bonds were a good source of yield because everyone assumes them to be guaranteed by the government, but they're still trading at a premium to government bonds. And so that's a reasonable place to go search for what is seen to be safe yield. And that's where you have greater exposure within some of those shadow banking components, trust companies, asset management companies, in some cases brokerages, asset management arms. That's where the exposure, I think, is most concentrated at this point. That's kind of what we can say. It's still unknown exactly where all of this can be concentrated.
And in all of those instances, are the assets owned exclusively by Chinese entities, or is there access to foreign investors, access by foreign investors?
There is some foreign ownership of China's onshore corporate bonds, but it's extremely small. There is some foreign ownership of LGFV debt issued offshore, but that is also extremely small relative to there's not really a significant foreign component. Everyone likes to say that China's debt is all owed to itself, that this is a left pocket, right pocket game, that this can all just be reorganized internally. That is a politically fraught process because what you're actually talking about in that case is who is going to bear the losses, not just, and how those losses will be allocated within the system and the implications that has for future growth and the stability of that system. The problem now is that all of this borrowing is implicitly guaranteed. Someone in Beijing needs to decide that we need to expose certain borrowers to market risk and therefore risk some of these loans being cut off or not being rolled over. And someone has to decide that that's enough market risk and not too much that might spill over into broader contagion or financial crisis. That's difficult.
Do you see that, I'm sorry, I'm way over time. Do you see the article that was in Nikkei magazine a few months ago where 43 LGVFs did not roll over their paper? Did you see that as an indicator of Beijing suggesting that they're going to let some of these localities go?
I think that is I don't view it as an indication that Beijing has made that decision yet. I think it is an indication of the financial stress that is building upon local government financing vehicles. The payables, the short-term corporate acceptances, we also see other evidence of even more defaults. We can track those on a monthly basis, and they've been rising very steadily. So it shows that local government financing vehicles are not currently able to meet their obligations within their existing debt burdens, and Beijing needs to intervene to restructure that debt. I don't think, the Politburo called for a comprehensive plan to address local government debt as of their late July statement on the economy. But I don't think the fact that some of these instruments have defaulted necessarily indicates that there's a decision that's been reached about what to do about this, or to allow some cities to default or some types of bonds to default. Those are very, very difficult decisions.
Thank you. I have questions for the other witnesses if we have that time.
I will go next, and then we'll go in alphabetical order. First, thank you to all of you for preparing such great testimony and appearing before us today. I'm really struggling here a little bit. I think all of you are mirroring each other in what you're saying in terms of the economic slowdown. Is the trajectory over the next decade, the next couple decades? Is it over the next 5 years? I'm not sure what the crystal ball says, but I think I think policymakers in Washington, rightly so, Dr. Wright, you pointed out in your testimony, people need to ingrain this as part of their thinking about what's happening to the Chinese economy. Are we getting out front as aggressively as we should about the implications to the U.S. economy if the Chinese economy continues to slow down? Not just risks to U.S. investors who are making investments in China, but also to our own sectors here at home. And what could Congress be doing right now in anticipation that this will have serious implications, not just here, but globally? So I'll start with you, but Mr. Borst, Dr. Liu, feel free to chime in.
Thank you. I think that the primary immediate spillover that we will see is not only is through disinflationary pressure or potential deflationary pressures through China's currency and through global commodity prices, which is what we've started to see some of this dynamic already, in which case some of that pressure is salutary for the U.S. economy, taking some pressure off of inflation, but that channel is fairly limited, given the low level of U.S. imports relative to the overall price level. So the concern, I think, is about China no longer being a source of growth in the region for our allies and partners as well, and the potential for greater disinflationary pressure from China's currency, if you will, feeding into competitive pressures to devalue other currencies as well. So let me just stop there.
Are other witnesses?
Sure. I'll just add a couple of remarks. I think, at least in terms of the financial markets, the slowdown in China is well understood now. It's very reflective in the performance of the major Chinese investment indices over the course of this year. So I think there's a lot of transparency and look through to a pretty broad consensus that the Chinese economy is slowing. In terms of the direct implications for the U.S., obviously, despite the slowdown in the bilateral trade relationship, China continues to be a major export market for a lot of U.S. companies, and so that will certainly impact their growth. China is also a major investment-focused market for a lot of U.S. investors, and so that will ultimately filter through to lower investment returns going forward. I think this notion of China's slowdown is much broader than just the country itself. In many ways, it has been kind of the heart of growth in the Asian economic region. And so to the extent that China continues to slow in the way that many of us are predicting, it will have a direct economic impact on many of our allies in the region who have huge economic ties to China. So I think, the impact on growth will be significant. But I would also say that, there's a variety of different ways that this could play out. I think there's a pretty broad consensus that the growth miracle is over, that we're not going to see Chinese growth go back to 8 or 9%. But there's a range of other outcomes that can occur, and that could be a relatively soft landing, something in the 3 to 4% ratio, or if they don't handle many of these financial risks that we've covered, it could be something much lower and much more volatile than that.
Thank you.
Thank you very much for the question. I will make 2 points. The first point is with regard to the deflationary pressure right now. And it's likely that the deflationary pressure in the Chinese economy could be transitory, could be temporary, because the component driving consumer price down right now from the latest data mainly comes from significant reduction in pork prices that can potentially be temporary. And but if this became a prolonged process, then a deflationary Chinese economy would also mean the Chinese export prices could be cheaper, and that makes Chinese goods more competitive in global market. The second point that I would want to make is that a slowdown of the Chinese economy, yes, would relieve some of the commodity prices from oil to gas, but that does not necessarily mean every commodity prices would go down, because in areas where the Chinese government put a lot of emphasis in, such as chips, such as electric vehicle, such as renewable technologies and renewable energies, though for those critical mineral demand in China is still going to be very high. Therefore, even the Chinese economy slows down, it does not necessarily mean every country would be impacted to the same extent.
Thank you. I will now recognize Chairwoman Bartholomew. Chairwoman, you're on mute.
Sorry about that. Thank you very much, and thank you to our witnesses for their testimony. I guess what I'm trying to think about right now is what are the implications both within China and how China's model is being perceived elsewhere in the world as a result of these economic problems. I mean, I know watching them, the people of China going through COVID and the faith and their trust in the system that was quite shaken by the lockdowns, for example. Do you think that it's having any impact within China on people's trust or faith in the ability of the CCP to manage the economy in a way that benefits people? That's the first piece. And then the second piece is for countries around the world that have been finding the Chinese model attractive, economic growth and authoritarianism. Is there any evidence that these structural problems might be having any impact on how these countries are finding this as an attractive option? And that's for any of you.
I can start on this, and happy to yield time to my panelists. I think the events of the past few years really have shaken a lot of faith in the Chinese economic model. There has historically been this implicit guarantee between the party and the people of stay out of politics, focus on the economy, everything will get better over time. The severe direct impact on many people's day-to-day lives of COVID lockdowns have shaken that for a lot of people. And so I think a lot of people are cautious about what the future means. And that's one of the reasons why we haven't seen this real strong resumption in consumption spending that a lot of people were predicting. I think a lot of people's outlook on the future has changed for the negative. And that's also quite true in the business world, where China previously had a very vibrant, dynamic private sector, really made a lot of progress throughout the 2010s. And then I think the regulatory storm that I referred to at the beginning of my testimony really shook confidence in that. You can't have big modern companies without rule of law. And when you implement policies in such a non-transparent, draconian way, that really shakes the confidences of businesses. People lose confidence to invest in the future. They don't believe that their assets will be safe. They believe, a government regulatory policy could come down at any time and really, fundamentally disrupt the business model on the businesses that they have spent so many years building. So in a variety of different ways, I think it really has shaken some internal domestic confidence. And then as we've all kind of hinted at, The key role of local governments within China's economy is changing now, and that's really due to the high levels of debt that they are now burdened with. So local governments have been a key player in the real estate boom. They're a key player in stimulating the Chinese economy during downturns. And they've been a key player in many of Beijing's kind of national level policy priorities, whether it's creating a semiconductor industry or Belt and Road projects. So now that these financial constraints are growing ever larger for local governments, they're just not going to be able to play that same role. And so one of Beijing's key tools in its toolbox for stimulating the economy and pushing forward some of these national policy priorities is just not going to work as well as it did in the past. And then for the question about the global implications, I think that will take time to filter through. China's had such a strong economic track record for the past 2 or 3 decades. I'm not sure many countries were trying to model the Chinese economic system as a whole. It's far too distinctive and really driven kind of by the party and state dynamics that are so important in China. But the idea of a real focus on infrastructure-led development, I think we're seeing the kind of natural consequences of when that goes too far, and I think that will have big implications for a lot of different countries.
Thank you. Do any of our other witnesses have anything they want to add?
If I could add one point just on the external, the external impact of the Chinese slowdown so far. I mean, it's obviously hard to monitor public opinion in other countries, but if you look at the Pew Research surveys that have been released recently, negative impressions of China have risen to all-time highs. The issue I would urge everyone to watch is how China manages negotiations on its external loans and its external debt. At this point, because that was really where the slowdown and the inability of the Chinese domestic system to absorb financial losses from some of these loans. And our own work illustrates that there's been about $78 billion $78 billion in loans that are either in default or under renegotiation since 2020 alone in terms of China's external lending. And the way in which China participates in that process is going to be, I think, where the rubber hits the road for their external diplomacy, because it reveals the constraints of their own domestic political system at the same time, and their own financial stress at the same time as their external attachment to trying to provide debt relief and their engagement with the global South as well.
Dr. Wright, sorry, just quickly, do you see that there's going to be a slowdown in external lending? Because that certainly would have diplomatic consequences for the Chinese government also.
We have already seen a slowdown in external lending, basically since 2018, 2019 over that time frame, and the rising risk of defaults and renegotiations on those loans suggest that there will continue to be an ongoing slowdown in external loans.
All right. Thank you very much.
If I can just add 2 points very quickly with regards to the question about trust of faith and evidence with regard to what extent Chinese model might be appealing. So on the question about faith, I think right now what we are observing of the Chinese economy really is a run on confidence. And this run on confidence comes from both domestic and international. The reason I said that right now we are observing the crisis right now at this particular moment is because the timing worth considering. China's domestic structural problems have been existing for a long period of time. And there is a pretty good argument to be made saying that back around the time of 2009 or even 2012, a lot of these structural problems already drag the Chinese economic growth. But at that moment, those structural problems were not necessarily crushing the Chinese economy. But right now, it seems to be that there is a crushing moment. And I think this really comes down to a run on crisis, a run on confidence. And the run on confidence come from international and domestic. The domestic really comes from, on the one hand, consumer confidence index has been very downward trajectory. Since April last year to April this year, and April this year was the last time the Chinese government updated consumer confidence index, and they paused updating it. During this 3-month horizon, only 3 months, from January to this year to March this year, only these 3 years, those consumer confidence was above 90. Most of the time was below 90. 90. So that basically means consumer in China are deeply not confident about the economy. And part of the reason comes from their income growth has slowed down. And then part of that is they were waiting for to what the government to make more stimulus incentives. The idea, there is this popular saying these days on the Chinese social media. In Chinese, it's said, 你不买我不买，价格减200. Translating into English, it means if you don't buy, I don't buy, the price is going to go down by 200 yuan tomorrow. So next week. So from that perspective, policy right now is very much deflationary. Therefore, Chinese consumers, household, individuals are not confident about the economy. And for that matter, we have at an individual level, they are also concerned that their economic security would be bogged down, or they might even fall victim to a broader geoeconomic confidence. And with regard to international, it really comes down to President Xi Jinping's policy swings and policy uncertainties generated lots of risk and uncertainty. So I'll just stop there with the interest of time. Thank you.
Commissioner
Thank you very
Borst?
much.
Wow, so many questions in so little time. What a great panel. Thank you all very, very much. I started my own business in the early 80s, and within just a couple of years, we had all the savings and loans in the country go broke, largely for reasons that you're describing occurring in China right now, which is surprising to me a little, although I've been reading about it. So I have a sense of what's going to happen, because we had all the developers in the United States effectively borrowing against future promises, and then the market changed a little bit. We passed a law that changed, and everybody failed. All of you have talked a bit about the debt ratio to the GDP, and I understand that in the private sector in America, it's common to have a large loan with a bank where quarterly you have to talk about your debt versus your overall income. And when it hits a certain number, in my case, in the 90s, we got up to around 2/3 of our gross, was our GDP. We suddenly had to come up with money to lower that ratio. So it's something that is common in business and government, and obviously not in China. I'm going to ask a question first of Mr. Borst, and then I guess in order, if we have time, Dr. Wright and Dr. Liu. Mr. Borst, you talk a bit about the debt to GDP ratio, and that strikes a chord with me, because I know that on the one hand, the local governments are running over 100%, but as a country, they're one of the best in the world, right? Around high 60s. And America has continually increased for a very, very long time. In fact, we have the 12th worst ratio in the world, behind countries like Venezuela, Japan, Greece, Lebanon. Singapore and Bahrain all have worse ratios than us. Everybody else's is better. We're at like 128, I think, if I just looked. So my question for you, Mr. Borst, is if our ratio to GDP as a country is one of the worst in the world, why is that not a major disaster compared with China and what they're facing? It would seem like each of you has said that systemically the central government could bail them out, but probably won't. And I'm inclined to agree because of politics. But how do the two compare when ours is so high and theirs is so low? Are we at risk, really at risk, if they have a further slowdown?
Yeah, thank you for the great question. You know, the US and China total debt to GDP ratio, if you're looking at both household, business, and government debt, is about the same. I think China has surpassed the US in the last year or two, but both about 300%. But the real issue, I think, is the structure of that debt. There's an issue at the first level of, we think of economies as they advance have this process called financial deepening, and it's much more sustainable and normal for an advanced economy to have higher levels of debt. Well, China has hit advanced economy levels of debt at a much lower level of GDP per capita. So China essentially has rich country levels of debt at middle income levels of GDP development. So that's one problem. But the real issue is, again, the way that the debt is structured. And so you mentioned on the government side, it's true that the central government of China has a very low debt to GDP ratio. It's about 25%, which is extraordinarily low compared to most other major economies. You know, the US is about 100%, Japan is, 250%. So from that direct perspective, you could say, well, the Chinese government has all this fiscal capacity. But the problem is, as we discussed earlier, is the local government debt situation. And so a lot of debt that in other countries would probably be considered central government debt has been really foisted upon the local governments. And there's this core imbalance in China's fiscal system that I talk about in my testimony that has been the source of so many problems in the economy. And that is that Chinese local governments are responsible for about 80% of total spending, but they only get about 50% of the revenues. And so the central government takes more than its share of revenues. It does distribute that back to the provinces a little bit through transfers, but local governments in China are constantly facing a structural fiscal deficit. And so they have invented all sorts of ways to get around that. Part of that is making money through land sales, although that line of business has dried up due to the real estate correction. And the other has been these off-balance sheet vehicles that we've talked about, the LGFVs. And so local governments have used off-balance sheet vehicles to borrow heavily, to spend on their behalf. But the problem is that these off-balance sheet vehicles really don't have any revenues of their own. They're completely dependent on new borrowing or from financial injections from the local governments. And so this issue of local governments having all these spending responsibilities, but not enough revenues to do it, hasn't been resolved. And until it's resolved, I'm very pessimistic about some of these financial problems. There are possibilities where they could take steps that I think would help change this. I talk about it in my testimony. The central government could take on more of these debts or could give more revenue to local governments, or they could finally sell some state assets to cover these debts. The problem is all those different policy choices are very difficult from an ideological perspective in China today. And so, the debt levels are high, but the real problem is the way the debt is structured. And I think they're ideologically constrained from taking some of the steps that would be necessary to resolve that problem.
I think we're out of time, so I'm going to defer to the chair.
Thank you. Commissioner Friedberg.
Thank you very much, and thanks to all our witnesses. It seems that all of you, to the extent that you've touched on this point, seem to be agreed that China is headed for perhaps a sustained period of slower growth, and that the reason for that is something that's deep in the structure of the system as it currently exists. It's not just the result of short-term policy. So my questions, and I guess for all three, and one, is there reason to believe that the CCP is perhaps okay with this? They might prefer that they were growing more rapidly, but they seem to be talking about making the point that growth is not the only objective, and that control and security and so on are critical. So first, is there reason to think that they're okay with it? And second, if not, what exactly could they do about it? And there's one answer to that that's implicit, I think, in some of the testimony, and that is that they could go back to the direction in which people thought they were moving 10 or 15 years ago towards loosening CCP control. If that's not likely in the short term, what are the alternatives for that? Could they push exports? Could they rely more on technological innovation? What could they do to get out of this corner? Mr. Borst, maybe we could start with you.
Sure, I'll just speak briefly because I want to leave time for the other panelists to chime in. But I think we are seeing a real struggle. I mean, we've seen over the past month or so a suite of new private sector reforms come out really aimed at improving the operating environment for the private sector. I think at the end of the day, the Chinese economy knows they can't grow entirely through SOEs, that they need the private sector for employment, for revenue, and for innovation. But it's been difficult. And I would note that even these private sector new reform initiatives still talk about increasing the role of party committees at private companies and having private companies support national policy objectives, which in my opinion are not great drivers of growth. So I think there's a struggle going on right now to figure out what the new driver of growth is. And from my conversations with Chinese economists, I think they're most likely to lean on the old playbook, which is just build more infrastructure, even if the country doesn't need it.
Okay, thank you. Dr. Wright?
Certainly. And I mean, I think that the way I would answer that question is that there's an understanding in China and Beijing that there are real constraints in the previous growth rate, but the forward-looking expectations are still very much contingent upon political objectives to double Chinese GDP by 2035, for example. And that requires rates of growth that are probably higher than what can be sustainably financed with China's system or under these new structural constraints. So it's more that the political discussion around, if you tell Chinese leaders that growth needs to be lower in the future, everyone can accept that. If you say that growth needs to be lower in the future, and that probably means that people are going to question whether we're inevitably rising in great power status and that we're going to, and that the great rejuvenation of the Chinese nation will be complete, then that's unacceptable. And so then you get into these constraints about what can actually be done in terms of structural reform. And Dr. Friedberg, just in response to the question, I mean, I think you're exactly right. You need some sort of reinvigoration of the reform agenda that was put in place with the 60 decisions of the third plenum in 2013. And it's been obvious that there's been, initial attempts along those lines, and then rapid backtracking when the market implications, the economic implications of those reforms become apparent. So the problem now is that after 10 years of backtracking and more status direction of the economy, how do you actually send that sort of, big bang signal that things are actually different? How do you credibly do it? Because there really is an inverse relationship between the concentration of political power and the credibility of some of these counter-cyclical and reform signals.
Okay, thank you. Dr. Liu?
Thank you for the question. And I would emphasize two aspects. The first part in terms of what if the CCP is not okay with lower growth, what are they going to do? The two aspects that the CCP would emphasize, and they have given clear policy signals to do, is to emphasize incentivize consumer spending and to focus on efficient investment. On the point with regard to incentivize consumer spending, since last December in particular, they put out for the very first time a strategic plan to expand domestic demand. And on the domestic demand expansion aspect, for the very first time, they prioritized incentivize consumer spending rather than focusing on government-led investment. And since the beginning of this year, there have been several policy guidelines focusing on ease consumer credit environment and all that. So from that perspective, incentivize Chinese household, in particular, private consumption is one important aspect. And they do have the reason to do that because right now, private consumption as a percentage of Chinese GDP is about 40%, whereas global average is about 60%. So from that perspective, the Chinese economy has significantly been under-consuming. And then the second point with regard to efficient investment, the primary aspect obviously is related to where the strategic sectors such as electric vehicle, quantum computing, artificial intelligence, and all that. But there is also very important or practical aspect that Xi Jinping is prioritizing, which is rural revitalization and focusing on not just land, farmland, but also food security. And the idea is to strengthen the rural base of the Chinese economy because major cities have basically been built out, whereas the further investment potential area would be the rural area.
Thank you very much.
Commissioner Goodwin.
Thank you, Madam Chair, and my appreciation to the panel. Dr. Wright and Mr. Borst, I want to return to this conversation about China's efforts to address local government debt problems. And Chair Cleveland was exploring this early on in her question. But earlier this month, I know the Politburo announced what they refer to as a basket of measures to help address this challenge. And some news reports earlier this month suggested among those measures will be a refinancing bond program authorizing these local governments and municipalities to issue up to $140 billion in bonds to repay or refinance outstanding LGVF debt with better interest rates. So I want your thoughts on the wisdom of that, essentially going into debt to repay outstanding debt, but also if you have any insight into the structure of those refinancing issues. Have they identified a dedicated revenue stream to pay the debt service on those bonds? And to what extent will the central government be involved in backing those issuances?
I'll start if that's all right. The problems in local government debt refinancing, it's really a fourfold problem that China has to grapple with all at once. First, you have the stock of existing debt. Second, you have the flow of how you're going to finance new investment in the future. Third, you have the entire basis of the central-local fiscal relationship and how you can more sustainably put local government finances, on a new plane. And fourth, you have a broader problem of how to raise fiscal revenues in this system altogether, because most of the tax system in China is heavily dependent upon investment-led growth and local government investment-led growth and the property sector overall. So this is a huge structural problem of which the measure you were discussing, the news announcement, is a very tiny first step in terms of alleviating some of the short-term financial pressure when you're talking about $1 trillion yuan or 1.5 trillion yuan. Something that would meaningfully address the stock of local government investment probably needs to be in the range of 30 to 50 trillion yuan. And ultimately, the only source of financing for this type of bond issuance to refinance older high-interest debt with lower interest government bonds is probably going to be the central bank balance sheet. And that could be done quickly. It could be done slowly. Beijing has a lot of choices in this regard. None of them are very good. Do you want to start small and then sort of expand this program over time so as not to frighten markets? Do you want to, start with individual provinces or cities or individual debt instruments? But when you do that, you hypothetically expose those others that are not directly guaranteed to market risk. Not an easy choice. Or do you want to try to break the implicit guarantees in local governments by allowing a few of these to default and then coming in with sort of a rescue package? These are uncharted waters, is all I would say. And the kind of measures you're hearing so far are very tiny incremental steps along those lines. I think we will see a plan emerge in the next 6 to 12 months, but I think it's far more likely to be a reactive incremental plan to address this rather than something more comprehensive and proactive.
I would just add on that, I think all of us are a little bit having deja vu because we've seen this happen before. So if you go back a decade, 2011, 2013, they're trying to get a handle on just the sheer amount of local government debt, setting out audit and inspection teams. 2023, that's happening yet again. The central government still doesn't know exactly how much local government debt is out there. And then one of the main changes being talked about is, local governments issuing more bonds, taking some of that off-balance sheet debt, making it explicit. That happened in 2015. And, in general, it's good to take, high interest rate, very short-term debt, transform it into something that's lower interest rate, more sustainable over the long run. But it doesn't solve the fundamental issue of, as long as these local governments continue to have this structural financial deficit, they're going to keep borrowing through these channels. So a little bit of blast from the past. We're seeing the old playbook, maybe even not as aggressively as it was pursued in 2015. The other thing that we're seeing is that the losses from some of these debts are really being hidden. And the way that's occurring is that, for example, with many of the off-balance sheet local government bank loans, banks are being told to extend that, extend the loan tenor 5-10 years, zero interest payments for 5 years, that sort of thing. That has the same effect of recognizing a debt. You're just doing it in a different way. And so I believe a lot of these losses will ultimately show up on the balance sheets of banks, the balance sheets of insurance companies and other investors in these bonds and other investors.
Thank you.
Commissioner Hellberg.
Thank you, and thank you to our witnesses for their testimony today. Having seemingly run out of dissidents and business leaders to disappear, it looks like the Chinese government has now graduated to disappearing its data. The Economist and the Guardian have described China's real estate market as a giant Ponzi scheme. The Washington Post also reported that a study of satellite imagery suggests that China may be inflating its GDP by up to 30% on any given year. If real estate activity makes up the lion's share of China's GDP growth, if China lies about its GDP numbers, if the Chinese government is juggling debt by using its right pocket to fill up its left pocket, if China is now hiding all of its underlying GDP data and investors aren't able to do any meaningful due diligence, can you explain to me how any investors could be confident that China's economy isn't a giant Ponzi scheme? And would any of you hypothetically invest your own family's retirement accounts in China?
Maybe I can start with that one. I think we're very concerned about the trend and direction with Chinese data transparency. I've been following Chinese data for a long time, and I think, earlier, a decade or so ago, it was actually getting better in terms of frequency and transparency for a lot of data releases. But particularly over the past 2 or 3 years, I think we've seen more and more data sets kind of not reflect what we're seeing in reality. And then also data sets that we've relied on no longer being published or being published very infrequently. So that's a major concern. I think, that's macro data. For company data, which is what I primarily deal with, we're always skeptical of every company's data. I think that's key to being an investor, is to approach a company's data with the skeptical mind. And so we try to rely on many different methods, looking at audited financial results, combing through financial models, talking to outside analysts, really making sure that a company's data can be triangulated in a variety of different fashions. But I think investors as a whole, if they can't get comfortable with either the macro data or the company level data coming out of China, will reduce their exposure to that market. And I think that's
how do you triangulate data about a company in China?
Yeah, so there's a variety of different methods, that's talking to the company, looking at outside sources of data that might be able to be matched against the data the company itself is putting out, comparing that company not only to its domestic competitors, but what we see in international companies that are in a similar industry or a similar business model, and really trying to look at it from a variety of different ways and just see if it passes the smell test.
Next witness, please.
And just in response to that, I think one of the things that we try to do is to follow the money in China's financial system rather than the official data. So there's actually fairly reasonable data on China's credit expansion, the state of the banking system, and one of the reasons that we've done this for so long is precisely because that is a very robust sort of area of data that's available, while the headline economic data is less reliable, particularly in terms of GDP. It's just not realistic to assume that China's GDP was more stable than any other countries that we could find over the 2014 to 2019 period, where GDP growth barely moved at all, despite the fact that policy changes, both monetary and fiscal, adjusted quite a lot over that time frame that were more indicative of a regular economic cycle. Similarly, it's not really realistic to say that China's economy grew at all in 2022. It's far more likely that the economy contracted in 2022, given the impact of lockdowns and other restrictions on activity. Headline Chinese consumption growth was negative. Investment from the property sector had certainly contracted over that time.
In a system that basically treats as espionage and criminalizes doing basic due diligence on a company. And would any of you invest your own family's retirements in China at this point in 2023?
I think the point on that I would argue is that China faces this long-term problem in restoring investor confidence. The outflows from China's system are inevitable. The inflows are not. The inflows are highly contingent. The outflows are inevitable because China has the world's largest money supply in dollar terms. the inflows depend upon all of those individual decisions that investors make. And investors have different priorities. And an absence of information can sometimes be a benefit to certain investors if they think that's an opportunity that they have information that others don't. And that is a different type of market environment. It's not the one where China has been trying to develop over the last 2 decades, but this is sort of where we are.
I would just add on that too. I can only speak to my personal experience, but I've done 2 trips to the country this year. I've met with more than 24 Chinese companies. Found them very willing to talk to me, open and transparent about the challenges they were facing. And to answer your question, Commissioner, I do have my own personal funds invested in some Chinese investments.
And so, and you talk to Chinese business executives in China, and you don't think that Chinese business executives have a long history of misrepresenting their books and misrepresenting their information to American visitors? You don't find that there is a long 20-year track record of misrepresentations in their characterizations of their economy? You trust that we should invest billions of dollars of pension fund money in the Chinese market at this point?
Yeah, we invest in a lot of difficult markets around the world, and I would say we always approach every single investment with a skeptical eye, and we never invest unless we can get beyond some of those thresholds.
And you think we should be, from a U.S. government standpoint, the U.S. government should allow American pension funds to deploy billions of dollars of funds based on a smell test and verbal conversations with business executives in China, not based off of objective due diligence that every American company has to go through here in the United States that's based on disclosure, accounting rules, and so forth?
Yeah, I think the most important things from a U.S. Investor perspective, I think, is transparency and disclosure. I think...
Do we have transparency in China?
I think...
Just outlaw that.
So I'm talking about the funds themselves. So I think it's very important for funds to be very clear about what their investment objective is, what exposure they will have, and most importantly, what are the risks that investors in a particular fund will face. And so that is a key component of investor education. And I think there's always a lot more we can do to make sure that American investors, when they invest in China or any other overseas market, really understand the risks associated with their investment.
Well, I don't want to take up more time, but my view based on this exchange is that it's high time to suspend the deployment of American pension funds in China, and typically American pension funds are not in the gambling business, they're in the wealth preservation business. Thank you.
And we will have a round 2 of time allots. Commissioner Price.
Hello, and thank you all for your testimony today. I found it very, very compelling. I want to pivot to some of your recommendations that you put in your written testimony. Some of them were very interesting, and I'd like to flesh them out a little bit more. So I have questions for each of you. I'll ask them all at top, and if we run out of time, we'll either go over or we'll come back to it afterwards. So thank you. So Dr. Wright, in your second and third recommendations, you talk about taking more active steps for financial support to emerging economies struggling to renegotiate debt. Can you talk about that a little bit more? And also trade policy that facilitates de-risking. You probably could do a whole another 20 minutes on that. But give me your top priorities for de-risking. Mr. Borst, you talk about giving investors clear rules. Can you just expand on that a little bit briefly? And Dr. Liu, you talk about a shared entity list, make recommendation around that. I'd like you to flesh that out a little bit more as well. So, Dr. Wright.
Certainly, thank you for the question. So I think that the point is that unless there is an alternative to Chinese lending and an additional source of finance, that it's going to put a lot of pressure on emerging economies. Beijing is still going to stay at the center of that diplomacy in terms of how to renegotiate the external loans that countries are struggling with at this point. What Congress can do, what other lenders can, in combination with the private sector, is provide a realistic alternative for alternative sources of financing. And that can help, at least at the very, to be an effective bargaining chip and force Beijing sort of back to the table in negotiations, even if it doesn't, even if it's not necessarily, productive in the short term. The point being that all of these countries are going to continue to be dependent upon Beijing actually acting, renegotiating, and extending debt unless we can offer something else as a source of financing. And so we need to actively consider what that would be and what that might do for a more positive and externally oriented aspect of U.S. financial diplomacy to the rest of the world and to the global South, where Beijing has been extending influence in recent years. So that's the argument within that recommendation. And similarly, when we're talking about de-risking from China's economy, we're talking about diversifying supply chains. We need to have a trade policy that is lowering trade barriers and facilitating the kind of public-private investment that is consistent with those markets where we're developing alternative manufacturing capacity, being able to access U.S. and allied markets more effectively. And that's the argument.
Thank you. Mr. Borst?
Sure. So just to add a little bit about the clear rules. So I think, U.S. policymakers have rightfully identified areas where there are key national security risks to providing Chinese companies with capital. And I think the vast majority of investors understand that, support it. But I think the key is setting out a framework that is transparent, predictable, gives U.S. investors plenty of time to understand the new rules, is very clear about how investors can comply with those new rules. And I think really importantly is having a review mechanism in some of these restrictions as they go into effect over the course of years. It's once a restriction goes into place, it can prove to be very difficult to unwind it, even if the situation has changed, if it's creating unintended consequences. So I would really just advocate as policymakers rightfully target specific areas of the Chinese economy to prohibit investment, that they're also thinking about, what look-backs are we doing 1, 2, 3, 4 years out to make sure that these rules are really working the way we thought they would, that they're not having unintended consequences, and that is a clear framework for U.S. investors to comply with this and not inadvertently trip over some of these restrictions.
Thank you. Dr. Liu?
Thank you, Commissioner Price, for the question. The shared entity list that I proposed as a recommendation is really with regards to, in the broader context of a coordinated FDI screening, both inbound and outbound and offbound, both in the United States and with our European allies, because the European Union has implemented their own version of FDI screening, but they are not necessarily to the same expertise or the same extent as the United States. The whole idea is not to implement protectionist policies, but really to strengthen U.S. leadership in shaping the FDI investment environment in the world. And I think there are some ground rules should be adopted with regard to both a shared entity list in terms of companies or foreign investors that are not welcomed, and an exempted foreign entity list that are sort of, the so-called white list. These are okay. And the whole idea is to convey to our strategic rivals, such as China or other competitors, the idea is not to constrain China's growth, but really is to not put a boundary with regards to what are off the limit. Because right now, I think in the U.S.-China relationship, the point of contention is that America's idea or America's intention of not focusing on containing China, this message is not delivered to the Communist Party and Chinese leaders. Therefore, by having a white list and a restricted list perhaps would be a good way to communicate America's intention.
Thank you. Very helpful.
Commissioner Shriver.
Thank you. This has been a fascinating discussion, and that was actually an excellent segue to what I wanted to ask about, but thank you to all our witnesses. So focusing on what the U.S. policy toolkit is and what we might do in response to the trajectory of the economy. I mean, mostly we've talked about insulating ourselves from spillover and protecting ourselves. We've talked a little bit about how we can stabilize, but I want to ask a different question. This is our strategic adversary, our rival. What if we wanted to pile on? What if we wanted to make these problems worse? What if we wanted to put Xi Jinping under tremendous pressure? What if we wanted to, divert their attention in ways that they never bother us on the outside again by having to focus, very intently on the economic problems and youth unemployment and the like. So even if you don't agree with it, and even if it's marginal, what are things we could do to kick them while they're down, if you will, put pressure on them given the experiences that they're having right now, the trajectory they're on?
I would argue against that sort of approach simply because Beijing's going to blame the United States for doing that anyway, as that occurs. But sorry, go ahead.
No, I said even if you don't agree with it, marginally, yeah.
Understood. I mean, I think that the challenges that course of action confronts are also about alignment with our allies and partners. And so any direct action we would take would be far more difficult to maintain the sort of agreement and transatlantic alignment toward policies and preventing backfilling among sort of controls on supply chains and changes in manufacturing policy that we would expect. I mean, I think that that's sort of the concern we would have. I mean, in terms of hypotheticals about what could hurt the Chinese economy in greater sense, it's very difficult for me to come up with anything externally that would do more than what has already taken place in China over the last 5 to 10 years. In other words, if you were going to think about how to sort of undermine the vitality of a robust private sector in China, you would do roughly what Beijing has done in trying to single out some of these firms for political targets in the last couple of years. So it's a hard question to answer just because, I mean, is anything that the United States thinks about likely to have anywhere close to the same effect as a signal from China's government itself in that context?
Yeah, just to add on that, I totally agree with that most of the problems China's facing now are self-created. So in that sense, they're their own worst enemy at this point. But, for the hypothetical, if we want to continue to increase economic pressure on China, I think, further decoupling will increase pressure on China. There's been more extreme measures that have been discussed in the policy world, and those could be put forward. Those will have a direct cost on U.S. companies and U.S. investors, but maybe, if you weigh the costs, it'll be more heavily on the Chinese side. But, just to echo some of the comments, I think that approach in the short run will increase pressure on China, but I think over the long run, it will actually be damaging to U.S. interests, because I continue to believe that a angry and isolated China is a greater danger to U.S. interests than one that is interconnected. And we've seen, the approach of sanction and isolate applied to many different countries, even smaller, more isolated countries that really hasn't paid real dividends. Chinese economy is too big, too interconnected, too dynamic to be isolated in that sense. And I think if we pull away the ladder and tell policymakers in Beijing and Chinese businesses that there's no room for them in the international economy, I think we're going to see some behavior and reactions in China that are much worse than what we're dealing with right now.
Thank you for the question, Commissioner. And I would also wanted to echo my panelist. Key argument with regard to perhaps there is more harm, the harm to the United States in terms of further pressurizing China, especially right now when the economic growth slows down, it's probably it hurts transatlantic partnership, as well as our trying to build strengthening our alliance with Japan and Korea. And on top of a lot of these supply chain pressure spillover effect, there is perhaps another underappreciated challenge that for the United States, if the Chinese economy continue to worsen, and that is immigration problem. Since the COVID pandemic, Chinese illegal immigrant came across the Mexican border actually have more than doubled. So from that perspective, I think the further pressurizing China probably would create more harm to the United States, both economic-wise and for us to dealing with our immigration problem. And in a hypothetical world, in terms of pressurizing China, perhaps trade is a very important aspect because the Chinese economy is still very much export-driven. But again, trade would be hurting American companies' interest as well.
Thank you. Just for the record, I think if we were on our back heels, I don't think the discussion in Zhongdonghai would be how can we help the United States. And I think we've got problems with fentanyl right now. We got all kinds of problems, and I see them pouring fuel on the fire at every opportunity they get. But thanks for the thoughtful answers.
Commissioner Wessel.
Thank you all to the witnesses, and Ms. Liu. I was hoping to be there today to have you sign the book, your recent book. Appreciated it and followed your work at CFR and elsewhere. So thank you. I'd like to go up for altitude, maybe literally as well. I think it was The Economist that had an article earlier this summer. I think the headline on the or the cover was Peak China. And what I'm hearing from each of the witnesses today is in some ways that China has peaked. And I think that is underappreciates what China is doing, that it is de-risking, whether it's through Belt and Road, whether it's through other industrial policies, whether it's through outbound investment approaches with Indonesia and nickel supply chains, or many other things. And I think what all of this, what I've heard today is potentially following some of the flaws in our earlier approach, earlier analysis of China. First, that reform would come from economic engagement. As you said, Mr. Borst, we've been through this somewhat before in the 2010s or so, and we're following the debt issues. We continue to evaluate China's approaches through a Western lens rather than through the CCP's lens. And I think that leads to fundamental flaws in terms of how policymakers are being told to respond to China. And what I hear is de-escalation. What I hear is de-risking. What I hear is don't push too hard, too fast. Rather than what are Western interests, first the US, how should we pursue them and worry a little less about how the CCP is going to how the CCP leadership is going to respond. So first, the question of has China peaked? Is that relevant? Is there a different trajectory they're on and we don't appreciate it? And is the current reset in U.S. policy with a limited outbound investment executive order, slowdown of congressional action on China, a sign that potentially we're reaching a new stasis? Mr. Borst, you want to start?
Sure. Yeah, it's a great question. I saw The Economist cover too. It was very provocative. I guess I don't quite know what they mean by peak. I and others have argued that the growth miracle in China is over. And we're not going back to 8 or 9 or 10% growth. And so from that perspective, we have entered a new era. But China is still going to be around. I don't think the Chinese economy is collapsing. I think there's many scenarios where the Chinese economy could grow slower, but still healthily at a 3, 4, 5% level for the next decade or more. So China will continue to be an important global economy. It will continue to be a major source of global economic growth. I think the IMF is projecting that even with the slowdown in growth, China is still going to be about a third of total global growth. And the U.S. will continue to have significant business interests in China. And I think now, as I say in my written testimony, is a really opportune moment where tables have turned a little bit. The U.S. economy is doing quite well. Chinese economy is kind of on their back foot. These have been the periods in Chinese history when they're actually most open to economic reform. China doesn't reform just to reform. It doesn't do it out of the good nature of its heart. It does it because it knows it needs to continue economic growth and how important economic growth is for the country. So I think this is a good moment. If we understand that China's not going anywhere, they're not going to disappear. I don't think the Soviet Union, outcome is likely. How do we continue to live with the Chinese, and how do we proactively advocate for U.S. interests as it comes to the U.S.-China economic relationship? That's what I think I would hope that policymakers would really be focused on right now.
Mr. Wright?
Yeah, I would agree with much of what Nick just said as well. And I think this is an opportunity. It's not that the peak in China, so to speak, is probably true in a broader economic growth or economic trajectory sense, but that still doesn't mean that the challenges that we're facing from China in many senses have peaked, whether we think, and instead, I would argue that this is an opportunity to refocus U.S. efforts, not on what the interaction between China's growth and inevitable rise, quote unquote, will do to those challenges, but instead focus on these individually, focus on them far more narrowly. When we're dealing with military and security challenges in Taiwan and the South China Sea, when we're dealing with spread of advanced technologies and competition in advanced industries, and in China's politicized influence over some of the next generation industries we're dealing with. And that's the only thing I'd add.
And thank you, Mr. Vissel, for your question. With regard to the question about peak China, I would say I agree with my panelists, Nick and Logan. And in particular, I would wanted to emphasize that actually China is still very much a leader in renewable technologies, in the transition towards a cleaner energy future. And China is still very much dominating the supply chains of critical minerals that are necessary for the world to transition to a renewable future. So from that perspective, I think, yes, if we measure the Chinese GDP growth or measure export as a percentage of GDP, China's economic growth model or the old playbook perhaps has reached running out of pages, perhaps. But depending upon how the government reform goes forward, and in particular the politics of that, there is a chance that China can sustain, but given the current political environment, is not clear. And with regard to de-escalating or the tension, I very much appreciate that question. And I think perhaps both countries or policymakers in both countries can borrow from a page book by Otto von Bismarck. I remember he once said, I forgot which year, but he once said, diplomacy is about the art of building ladders to let people climb down. And in Chinese, I think it basically means to 给台阶下, let somebody gracefully climb down. And I think perhaps right now, American leaders should lead the moral high ground to give President Xi Jinping and Chinese leaders an opportunity to gracefully climb down.
Thank you.
Thank you.
I'd like to recognize Vice Chairman Wang.
Well, since Bismarck was invoked, he also said war is diplomacy or the continuation of policy by other means. I don't know how that fits with the latter, but anyway. Dr. Wright, I want to focus in on some of your recommendations. you recommend what you term alternative channels of financial support for developing economies that are struggling to renegotiate debt with China. What do you mean by that specifically, if it doesn't mean the kind of current multilateral lending institution or multilateral development bank lending that we do with our allies?
That would likely be a component of it, I would say, Commissioner, but you would probably need some additional policy support for private sector to invigorate private sector support for that as well. The point is, you need an alternative. If Beijing is not going to provide meaningful debt relief, and the negotiations are sort of starting to bog down in that respect, and countries are struggling with significant financial stress, then they're going to need some sort of additional marginal source of new financing. And ultimately, this means the rest of, we will need to provide some sort of alternative for that, which has the added benefit of, if you will, removing Beijing from the center of that aspect of economic diplomacy, with some of their primary allies in those countries aligned with them because of Belt and Road related lending.
So would that in effect be the U.S. and our allies helping to refinance debt to China? I mean, effectively?
The whole argument would be that if China is not going to provide meaningful relief, that you need to provide countries with an alternative of saying you can walk away from your debts to China, and we will still provide, and that will not impact your broader credit status and your creditworthiness in global markets. That's kind of what we need to offer, renegotiating with everyone else.
Okay. And the strategic impetus behind that is that for us to blunt Chinese influence? Is that humanitarian? Is that to maintain global financial stability, or is it all three?
It can definitely be all three. I mean, I think you can argue this is very self-interested from the United States perspective, that it fulfills this strategic objective because many emerging economies are going to be struggling to maintain basic services. There's various measures of just how distressed given the rise in U.S. dollar financing costs, the rise in debt in recent years. There's going to be significant pressure in emerging economies unless someone provides that form of debt relief. So you can argue it's explicitly self-interested in that respect, that we maintain global financial stability through those channels. But it also has the added benefit of expanding the U.S. channels of influence with countries with whom China has engaged most directly in recent years.
Alex, can I clarify something?
Sure.
Yes. In that context, are you suggesting that China's, the underlying asset or the project, they're severed from? So international donors step in to try to offer the relief that some country needs. What's the ongoing relationship with China, and how do you avoid free riding?
Yeah, I'm not sure exactly how that will work out. I mean, that is going to be a problem. The point is, without an alternative, these countries are still going to be within Beijing's orbit and engaged in this very slow process where Beijing's not providing this. But in terms of the actual mechanics of how debt renegotiation will work, I can imagine some scenarios in which they would be walking away from those projects. I can imagine some scenarios in which you would find alternative financing channels for them.
Okay, I think I'll send some follow-up written questions on that, because I think it's a nuanced and detailed topic. But I also want to talk a little bit about your phrase in one of your other recommendations about next generation trade and investment policies to aid in de-risking and supply chain diversification. Now, you touched on this in another question and answer session with Commissioner Price, but I just want to ask, at the risk of being somewhat sensitive here, I mean, this term next generation, I know is stylish, but are we really just talking about old generation kind of investment treaties and trade agreements, whether it's sectoral or broadly based?
Absolutely. I'm not trying to imply that there's anything really innovative or different about this. I think what we need to do is, if we are ensuring, in order to sort of reinvigorate the trade policy agenda to try to reduce barriers over time, if you are going to be trying to provide or offer alternative sources of manufacturing supply chains from locations in China, you're going to need to be reducing trade barriers so that countries can be encouraging investment at lower cost, and the byproducts of that investment can also be traded more regularly. So yeah, it is a basic call for reinvigorating U.S. trade policy in Asia in particular, and more broadly. But that is the argument, is that if you're thinking about de-risking or decoupling kind of risks, you need to be thinking about the next step of this as well. That's what I was trying to say in the recommendation.
Right. Thank you very much.
We are running up against time. I know several of the commissioners are going to be submitting questions for the record, and we are very grateful for you coming before the commission today. This was very rich testimony, as you can tell by the discussion and the number of questions. So thank you so much. We will adjourn until 11:25 until our second panel. Thank you.
And acknowledge Nargisa.
Oh, and Nargisa, nice to see you. Thanks for being here.
Hi, Nargisa.
Panel 2. Our second panel will examine evolving trade and supply chain challenges in the U.S.-China relationship. We'll start with Dr. Christopher Gopal, who is a former executive, a global supply chain consultant, and the author of the recent book, Breakthrough Supply Chains: How Companies and Nations Can Thrive in an Uncertain World. He will provide an overview of the evolving supply chain landscape. Then we'll hear from Dr. Ilaria Mazzocco, a senior fellow with the Trustee Chair in Chinese Business and Economics and the Center for Strategic and International Studies. She will address the rapid rise of China's EV exports and the role of China's green industrial policies in its trade and supply chains. We very much appreciate both of your testimony and would like to remind to keep your remarks 7 minutes so that there is ample time for questions. Dr. Gopal, there you are virtually. Why don't we begin with you?
Thank you, ma'am. And first, members of the Commission, I'd like to thank you for the opportunity. Can you hear me?
Yes.
Oh, good. I'd like to...
No, we can't. Count backwards. Okay. Something's happening with our sound, with our witness. Do you suppose that we could correct that? Because I know I can't. Why don't we move to Ms. Mazzocco? Could you pick up while we're trying to sort out whatever pixie dust needs to fix that? Thank you.
Thank you, members of the Commission and staff members of the Commission, for the opportunity to be here today. I've been asked to discuss the electric vehicle sector in China and implications for the United States. Let me start by saying that, like with other clean energy technologies, such as solar panels, China's growing importance in the EV supply chain hinges on its cost advantage. Vehicles made in China are affordable and of increasing quality.
I can hear you, and I'm hearing several people.
Should I just...
Mr. Gopal, we've asked your colleague to go ahead and speak because we couldn't hear you. So we're trying to correct your technical difficulties. Can you hear her speak?
I can hear you. I can hear Ilaria, yes.
All right. Well, if you'll wait until she's finished testifying, then we'll turn to your testimony.
Absolutely.
Thank you. Shoot.
Great. So vehicles made in China are affordable and of increasing quality, making them attractive to consumers worldwide. The cost of these vehicles could also undermine supply chain diversification efforts underway in the United States, although they could also help advance electric vehicle adoption worldwide. As a consequence, policies should take into consideration the trade-offs as well as cost and competitiveness. I will now discuss briefly the state of the industry in China and how competition and large manufacturing capacity there, combined with increasing international demand, are driving a surge in exports, then discuss what the patterns in exports looks like, and finally, how growing exports are setting the scene for an expansion in international manufacturing on the part of Chinese companies. I will then offer some recommendations. The EV industry is considered today one of the most successful instances of industrial policy in China in recent years. Indeed, as a result of converging industrial policy, government interventions, including subsidies, market and technological trends, most EVs today are bought and made in China. As is typical of industrial policy in China, after a wave of overinvestment, we may be headed towards overcapacity, and intense competition is certainly underway. A very large number of companies entered the market attracted by subsidies, but they are now navigating the most competitive EV market in the world, driving down prices. Consolidation of the industry may be complicated by the web of relationships between companies and local governments, something that has characterized the traditional automotive sector in China as well. Local governments have provided various types of support, including tax breaks and preferential procurement contracts, but they're also quite literally invested in the success of companies. Importantly, several investment funds owned by local governments are investors in EV companies. This is an example of below-market equity, but access to below-market credit is also widespread and an industrial policy tool in China that EV companies have benefited from. Some non-Chinese companies have also benefited from government support at times, especially from local governments. This competition is driving down costs and putting pressure on companies to find new markets. As a result, EV exports from China are growing fast. They doubled in dollar terms from 2021 to 2022, and based on data from 2023, it looks like they're probably on track to double again. Europe and Asia are the main destinations of these exports. Foreign companies are certainly part of this trend. In the first half of 2023, Tesla accounted for almost 40% of exports from China, and joint ventures between Chinese and European companies accounted for another 9.5%. So that adds up to almost half of the exports. This points to two concurrent trends. China is becoming a manufacturing export hub for multinational companies, and Chinese-owned firms are becoming increasingly competitive and exporting more to new markets. As these Chinese firms expand their market presence outside of China, they have an increased incentive to localize production. By making vehicles and batteries locally, companies can avoid tariffs and high transportation costs, benefit from host government incentives, and mitigate political backlash. There are multiple planned factories of this kind and a few that are already existing. Thailand is by far the greatest recipient of these investments. Host governments are not passive players. In many cases, they're actively trying to attract investment. This is the case both in Thailand and Brazil, for example. Even in Europe, where imports from China are contentious, FDI is far less so. So far, most investments in Europe and North America are in the battery segment, not vehicle construction. But it is not immediately clear whether Chinese firms will be able to maintain these very low costs and prices when they are operating abroad, especially in regions like Europe with high energy and labor costs. So this all adds up to a complicated picture because growing exports from China create a dilemma for policymakers. On the one hand, Chinese supply chains can help reduce costs. On the other, automotive manufacturing continues to be an important sector for many advanced economies, including the United States. And if production were to relocate to China, this could undermine domestic job creation and potentially lead to deindustrialization. It would also undermine de-risking efforts. So what can be done? I would strongly recommend against trying to slow down the transition to electric vehicles in the United States. Quite honestly, the United States tried this and it didn't really work. It would also be counterproductive because the transition is well underway globally, and the United States would become even more of a laggard if it tried to reverse this domestically. Instead, policymakers should continue to provide more incentives to advance a diversified and competitive industry and promote innovation, in line with the Inflation Reduction Act. This will require a realistic assessment of supply chains, as well as the trade-offs attached to trade policies. To this end, I recommend that policymakers, 1, identify under what conditions Chinese companies can and cannot play a role in American EV supply chains. To make this judgment, policymakers will need access to better data on supply chains and costs and require more transparency from companies, consistent with recommendations that this commission has made last year. 2, trade tools can be powerful instruments in achieving de-risking, and policymakers should explore their use, but they should also evaluate their impact on costs very carefully, as they could undermine the industry more broadly. 3, this is not a uniquely American challenge, and there are certainly opportunities to further coordination and cooperation with other countries that are grappling with China's rise in this sector and what this means for their economy. I will stop here and look forward to your questions. Thank you.
Thank you. Mr. Gopal, can you hear us? Are you prepared to testify? Please proceed. Jameson? Mr. Gopal, we could hear you a few moments ago. For some reason, we're not able to hear you right now.
Can you hear me now?
Yes.
Thank you. I hear somebody else talking.
Oh, you probably hear the congressional studio. Could we turn those off, please, so that he is not distracted by that chatter?
So
why don't you proceed?
Oh, good. Can you hear me now?
Yes.
Okay, great. I heard about 3 different people talking at the same time, and one of them wasn't me. Well, let me start off again. I want to thank all the members of the commission for the opportunity to testify on this. I think it's one of the most important topics and one that impacts pretty much every citizen in the country. So I shall talk based on a supply chain perspective. And that is not a macroeconomic perspective, but I can hear everybody.
Could you describe what it is that you're hearing so maybe we can clear it out? What is the problem?
Should I? Okay. Again, for today, I'd like to lay out.
Dr. Gopal, close your other internet browser window that has the live stream going.
Okay, now can you hear me?
Yes.
Terrific. Let me start off again. Thank you, everybody, for this opportunity. And please let me know if you can't hear me at any point. So I think I'll talk from a supply chain perspective, from a ground level, from an executive level. And Chairperson Glas accurately summarized the situation very well in her opening statement. We've come to the realization over the past few years that driven by pandemic, global conflicts, and events, our critical global supply chains from the point of first supply to the end consumer and back, what we call dust to dust, are highly vulnerable and dependent on China. This is the result of what somebody called willful blindness on our part to the US-China relationship. And let me describe some of that from a supply chain perspective. First, I've heard the term critical supply chains quite a bit. Critical supply chains are all the products, capabilities, technologies, and investments that impact all areas of our national security, defense, health, and well-being. Everything from PPE and antibiotics to defense, to hypersonics, to electric vehicles, and artificial intelligence. And disruption in any one of these can have cascading effects throughout the supply chain and pretty much bring our economy to a halt. So the situation has been driven by several different issues. A lot of them, we talk about the China issue, but a lot of them have been our own doing. For instance, our trade philosophies and globalization assumptions, where we assume the movement of goods, money, people, technology would flow across countries with no government intervention very smoothly, where competition would fuel growth with small businesses, lower our overall total costs, and generate innovation. In other words, the level playing field. What we found is that hasn't happened. The aggressive national supply chain policies and objectives of China, and there are several: market incentives, financial incentives, low cost and stable labor, promise access to the markets in order to become the manufacturing center of the world. We see that very clearly. The coercion of companies to adhere to political and social standards, the acquisition of technology and intellectual property by almost any means available, location in third-party countries to sidestep US and other government policies, and a strong, and this was discussed by the earlier panel, investment and initiative in other countries to corral the supply of essential elements and minerals, which drive our supply chains. And finally, the most obvious one, dumping at low cost. And I think we can agree that these have been pretty successful from a supply chain perspective. and then something of our own doing in this situation, which is called the financialization of the supply chain. Topic and concept highlighted by Rana Forohar in her book Makers and Takers some time ago. Basically, decisions made by individual executives and boards to drive costs down, reduce assets, offshore capabilities, to basically address the benefits to shareholders, not other stakeholders or national security or communities. And it's driven by what we used to call short-termism Wall Street demands, as well as executive compensation based on share price. And finally, the concentration of various industries and domination of distribution channels, mainly because of our laxity in enforcing our own rules and regulations. The combination of all of these, external and internal forces, has been to develop fragile supply chains globally. In other words, supply chains that are built to break under stress. And the stress includes everything that comes at us from the outside. And the characteristics of these supply chains are dangerous choke points in China and other places, which could disrupt our industry, loss of our intellectual property and technology, the loss of our own education system, manufacturing, supply chain, technology, in education, our hollow communities, and let's not forget the vulnerability to our national security. But this has not been a surprise. Okay. The dangers and risks have been brought together by this particular commission in 2002 and by forward thinkers such as Barry Lynn in his book, The End of the Line. Let me read one particular extract from the 2002 report. US policy towards China has been driven by narrow commercial interests, specific human rights issues, or particular military and security issues. The increasing transfer of US research and manufacturing facilities to China could have a negative impact on the strength of our technological and industrial base, as well as our relative military strengths. Nobody could have said it better, and this was said 20 years ago. So, hence the term willful blindness. So what can we do to help our supply chain? There are several things that we can do, and I've laid them out in the written testimony, but a brief summary. First, it's a tug of war between national security, between individual wealth and company wealth. And we have to get around that. But essentially, I would suggest we must continue the funding of our US manufacturing and infrastructure. Great start, a lot more has to be done, and it has to be expanded. Critical supply chains are not just semiconductors and not just artificial intelligence. They're everything. We need to help small businesses with financing and help them with innovation. We need to know what we're dealing with, so we need to map our critical supply chains end to end. Very importantly, we need to mandate sourcing parameters and foreign ownership parameters so that we can look at critical industries not being tied to one country, but maybe reshoring, nearshoring, ally shoring, anything other than stuck in one country with one source. We need to preserve and protect our research and technology through what the Biden administration has done recently. And we need to do a lot more of that, including restricting access to our technologies, as well as restricting foreign enrollment in our prime technology at our universities. And finally, I have to add this, we have to emphasize and fund STEM and our vocational schools. And with that, I'll stop, and thank you very much for the opportunity.
Thank you, Dr. Gopal. I think, Carolyn, are you there? No. So we'll begin with Commissioner Borokoff.
Thank you both very much for your very interesting takes. From my viewpoint, Dr. Mazzocco, you were very specific talking about EVs, and Dr. Gopal, a much more general look at what's happening and what needs to happen. So it's hard because I can't ask a question, or I'm not capable of asking a question that applies to both of you after listening. So Dr. Mazzocco, I know that a huge percentage of the EV battery market is 80% controlled by China. Lithium batteries are just their purview at the moment. And yet it's clear that America, if it chose to, could get involved in that in some fashion. And we have immense resources to be able to do that both here and near here. Our EV vehicles are selling extremely well domestically that are made here. And you pointed out not well at all in Europe or China. Given the fact that the batteries are such an integral part of this, is there even a way for us to grow our market? I'm concerned about the domestic sales of EVs. I mean, Ford has a waiting list for their trucks. Their vehicles are in great demand, but they aren't making the batteries. So my question is that a lost cause, or is it something that, in your opinion, can be corrected?
So actually, as a result of the Inflation Reduction Act, there's been a surge in investment in battery supply chains in the United States. I would say what is something to keep an eye on is that a lot of it has to do with the assembly of the battery, so the battery pack, as opposed to the components that go into that battery, right? So the cathodes is really where a lot of, I think 80% according to DOE are made in China. Now, in terms of whether it's a lost cause, I think actually the question is not so much whether they can be made here. I think they can. There are some concerns about cost. I think that's a big one. Environmental costs as well, right? It can be very polluting to refine some of these materials. That's why they got offshored in the first place. But it's also which companies are going to be doing that, right? So I think that's a big concern here, and that's part of my recommendation is that we need to actually have a better conversation about whether or not to allow or embrace of FDI from China, because it's already happening, right? We already have the Ford CATL deal. We have the Goshen factory in Michigan. And that's because there are no real American companies that are making these batteries at a large scale. We do have, the Inflation Reduction Act facilitated encourage investment from other companies, from Korea or Japan. But because Chinese companies are just so advanced in these batteries, in some cases there's some technology that other companies don't have. Now, I don't doubt, in fact, I'm certain that a lot of American companies and scientists have the technology to even produce more advanced batteries, but the problem is creating them at scale and at cost. And Chinese companies have just had a lot of advantage. They've had a decade of experience in making these, in part because that's where the market was until recently. They've been selling electric vehicles over a much longer time. So I think it just requires time, and I think it's going to be very difficult to do without foreign investment. And I think, frankly, it's going to be very difficult to do without any involvement on the part of Chinese companies. And now that might be involvement on U.S. soil, and maybe in countries with which the U.S. has a FTA, and in terms of refining or extracting minerals. So I think I think it will be important to maintain that de-risking mentality and encourage more investment in the U.S. or in partner countries. But I think we need probably to have a more realistic assessment of where Chinese companies may be entering and where that is more of a risk or not. Because I think in some cases it may not be as risky as in other situations.
Thank you for that. I would point out that a man from America who just passed away, Dr. Goodenough, who won the Nobel Prize, invented all of those, and recently has invented, just before he passed away, batteries that he thinks will last effectively for decades. And we gave that away to a foreign country because we wanted to save money on construction and manufacturing. So it's unfortunate we did it that way. And we have about 20 seconds left. Dr. Gopal, if you can pop in and pop out if you're interested.
I certainly am, sir. Thank you. I agree with everything my colleague said, but looking at it from a supply chain perspective, which is the perspective I always look at things from, the upstream end of the supply chain is at risk. In other words, lithium, cobalt, nickel, all of those minerals are things we don't control right now. I'm not saying that we couldn't have them here, but that will require not only investment, but a lot of political will about mining and so on. But right now, we are busy building the front end and the downstream of electric vehicles. And it's the upstream that's really the concerning part of it, because we don't own that. A lot of that is controlled by China and Chinese companies. And it's something we're going to have to work around and discuss.
Thank you very much.
Thank you, Commissioner Borokoff. I'm next. So I'm interested, Ms. Mazzocco. You talk at length about the approach to evaluating supply chains must be broadened to include the supply chains, products, capabilities, materials, and technologies that impact health, PPEs, antibiotics, active pharmaceutical ingredients, food, renewable energy products, aircraft and automobiles, amongst others. Is it really possible for us to determine a definitive list of what comprises critical items for our supply chain? Or is this a fool's errand?
I believe that wasn't my statement, but I can comment on it. Yes, I do think it's challenging to identify what is critical. I actually think it is important to identify what is critical because otherwise everything becomes critical. And so I would actually encourage to have a very narrow view on what is actually, for example, a national security threat as opposed to just something that may threaten certain elements of the economy, right? And I think, for example, when it comes to the electric vehicle industry and batteries, this is very important from an economic standpoint. I think it has very big implications for the political economy. I think national security-wise, the implications are far less concerning. And so I think, for example, here, that doesn't mean that one shouldn't take action, but one can take action in different ways, right? And so the types of risks that are involved are different. And so that's part of my recommendation is to take a very clear stance in identifying what exactly the objectives are and how to act upon them. So, for example, cooperation with partner countries can be far more effective, I think, when it's not a national security concern. And I think there may be certain flexibility when it comes to allowing certain types of companies perhaps being involved in certain levels and certain elements of the supply chain.
Thank you. Dr. Gopal?
Yes.
Is it possible to establish a definitive list of what is or is not critical?
I believe it is. But let me back off a minute because that was my statement you read. And what I meant, we have to look at criticality, the things that will seriously hurt us if they're disrupted along a number of fronts. This does not mean the things that will seriously hurt a few companies, a few investors, things like that, but seriously hurt the country. And the second part of that is, what are the risk profiles of these things? So a critical supply chain may not be something we want to focus on if we can recover from disruption really quickly with our allies. A critical supply chain is something we have to focus on if it will take a lot of time and money and effort to recover while the economy is being hurt. And there are several of those. It's not an inexhaustible list. It's a fairly short list, but it has to be looked at both from the point of criticality and risk.
Is there any evidence that in these items that you have identified, at least as a preliminary list, is there any evidence that the United States is taking action to stockpile either critical materials or items that you view as national security risks?
I believe in the defense arena, yes. But otherwise, I don't see much of that from the point of view of private supply chain companies or even the government. And I'm hoping we don't actually stockpile them, but we build the capability to manufacture and get them out, which is the better way of doing it.
Well, like the strategic oil stockpile, I'm not sure I agree with you, but I also don't think that we should stockpile everything. But if we do believe something is, as you characterize it, both at risk and necessary, it would be interesting to see if there was any effort to map to stockpiles. Commissioner Friedberg, are you there?
Thank you very much. I had a question. I'd like to pose one question for each of our witnesses. Dr. Mazzocco, you started off by making the point that this forthcoming flood, you didn't use that term, but of low-cost Chinese electric vehicles could undermine the efforts of the United States and others to build up their own sources of production and supply for the components of these vehicles and for the vehicles themselves. So my question to you is, will it be possible, in fact, for other countries to catch up with China, to build up their own industries, the EVs, the batteries, and so on, without imposing some kinds of restrictions on imports of these products from China? And what are the implications of that if it's true? Dr. Gopal, you used the very interesting term, a supply chain war, which I think is a good way of describing what's going on. And in a war, of course, you have two sides, and each is pursuing its own interests and objectives and has its own strategy. And China seems to have a pretty clear strategy of trying to reduce its dependence basically on the West for various things, while doing things to maintain our dependence on them. And so my question for you is, what are the implications for U.S. and sort of wider allied strategy of the strategy that China is pursuing, essentially to try to prevent us from reducing our vulnerability and dependence? Because it appears now as if we don't really have much of a strategy. Private sector actions, government action in a few narrow cases, but no overarching strategy. So Dr. Mazzocco, first to you.
Yes, thank you. That's a very good question. I would say currently most countries do have some level of protection when it comes to the automotive sector, right? We have 27.5% tariffs right now in this country on Chinese imports. In Europe, it's much lower, and that's why we're seeing more imports from China. I think it's around 10%. So these already exist. So I think it's more of a question of whether they should be increased or changed. I think in reality, what needs to happen is some sort of balancing as towards the trade side of things, and also the attracting FDI level of types of policies, right? So on the one hand, there needs to be far more investment domestically to build up manufacturing, and then the other, there needs to be a maintaining of certain level of tariffs, right? I'm actually not suggesting to increase tariffs, but I think reducing them would probably not be ideal. I do think there is a risk of overcapacity in certain countries. I think that's basically where we're headed towards in China. I think that's part of the issue, is that we're going to see more exports because of that. There is a question, though, whether these companies can keep it up, right? I think in some cases, many Chinese companies are actually operating at loss. So that's something to keep into consideration.
Thank you. Dr. Gopal.
Thank you, sir. So what I'm about to say is probably makes me unpopular with a lot of my colleagues, and that's okay. Yes, I don't believe we have a national trade strategy, and I believe we should. It should be based around economic well-being, our long-term sustainability, and our national security. We don't have all of that. Everything is in bits and pieces. And a lot of our national trade strategy is subject to individuals and individual companies, individual industries. So for instance, we talk about auto tariffs, and we talk about some restrictions on technology, yet our major companies are giving away our IP to China, building factories in China, working with the Chinese to circumvent any restrictions. And we don't have any policy as to what defines sourcing, ally sourcing, friend sourcing, reshoring, any of these things. So, sir, I do believe we need to have a national trade policy that addresses all of these and that addresses it from a national, not an individual or industry point of view. And I hope that answers your question.
Okay, thank you very much.
Thank you, sir.
Many thanks to both of our witnesses for coming before us today. You know, I have a few questions. It sort of dovetails from panel number one. So what we know is there's fragility in the Chinese economy that has created a lack of consumer confidence to the same extent it used to exist in China, lack of consumer spending. We've got party official who is trying to stabilize and paint a different picture on the world stage, masking what is really essentially a recession happening in China and its implications to the world. So I'm trying to think about supply chains in that regard. Lack of consumer spending, looking at export markets, secondary markets to the US economy, investing in other markets to gain access to the US economy as a workaround to the current trade rules that exist, including the Section 301 tariffs. And I lose sleep at night in terms of what are the implications to US manufacturers and service providers, because the Chinese government, its party, its officials are doing everything they can to help prop up industries right now. And to what extent, I know we've talked about EVs quite a bit during this session, and we have an EV expert here, but what are the implications longer term, and do we have enough trade tools in our toolkit to address what could be a very severe economic harm both to the United States economy and to our allies? And that's my read in the situation, so please disagree if you have a different perspective.
I'd like to just jump into that quickly, ma'am. And yes, I completely agree with you. From a supply chain perspective, what we are looking at across the ocean is not what economists look at. We're looking at an economy in China that's going down slightly, consumer spending is down, but the capacity is still there. So what have countries traditionally done with that capacity? So we're looking at dumping. We're looking at dumping low cost, lower than cost items in our markets, either directly or through subsidiaries located in Mexico or in other places, or through other companies that are controlled. But we're looking at that sort of thing. And the only way I think, well, that's one of the major issues. The way we can handle that is through our restrictive laws as we have it about dumping and things like that. But that is a serious, serious concern. Meanwhile, there's going to be no let-up in the Chinese attempting to take our technology because of their development of defense systems and their own military capabilities. So they will buy stuff. So I see no let-up in the degree of competition in the supply chain world with those developments in China. Over.
Yes, right. This is clearly something that's very concerning that the U.S. should be keeping an eye on. I spend a lot of time thinking about clean energy supply chains, and there the dilemma is particularly acute, I think, because on the one hand, this is an industry that the U.S. does not have a handle on, right? This is an industry that we're trying to develop currently in the United States, and similar efforts are underway in other countries, like in the European Union, for example. And even in some developing countries like India, for example, right? They're trying to develop their own clean energy supply chains. But at the same time, costs are continuing to fall in China, and so we continue to see exports. That's not a bad thing in terms of consumers globally, right? There's access to these technologies, but it's not good from a perspective of our domestic economy and de-risking, which are all pretty important targets. So it creates this big policy dilemma that I've been talking about. I don't think there is an immediate panacea. I don't think there's one trade tool that we can point to that can solve everything. I do think there needs to be far more thinking about this and needs to happen fairly quickly. At the moment, there are none of these, the flood of Chinese EVs has not happened in the US, but the cost is so low that eventually a 27.5% tariff may not be that big of an obstacle. That may not be, this might take some time. It may take very little time. We don't know, but I think there needs to be a lot more creative thinking about different types of tools that can be utilized. I do worry that cost is going to be a very big concern, because that's typically what trade tariffs do, right? They raise costs, and once these products are not competitive, there are alternatives to these, which are fossil fuels or traditional automotives. The traditional automotive industry, which then undermines the broader transition, which makes the U.S. less competitive and less innovative, right? So I think there is a bit of a, there's a lot of juggling that needs to happen in this.
Thank you.
If I can just say a couple of sentences on that. I agree with everything Ilaria said. That's terrific. I'd like to point out another implication of this. Reduction in costs in other countries leads to our own costs being, quote, uncompetitive, which in the past, because our executives are compensated on share price, and we have some short-termism in what we get from Wall Street, will lead to increased outsourcing and offshoring of critical things, which in the past has led to hollowed out communities and everything else that we talk about. So this is an issue that we need to look at from a nuanced and multifunctional perspective, not just the economics of it. Over.
Thank you.
Commissioner Goodwin.
Thank you, Madam Chair. Dr. Mazzocco, in your testimony, you indicate that attempts to completely insulate us from competition is not the right approach, and instead continuing to pursue incentives to advance our domestic manufacturing capacity and encourage investment in EV supply chains like the IRA is the right approach. And you recommend then what we need to do is identify under what conditions Chinese companies can play a role in our EV supply chain. And I wonder whether the IRA and some of the specific investments you referenced in your testimony raise a separate question, which is under what conditions should Chinese companies be allowed to directly benefit from the financial incentives and consumer subsidies in place to encourage EV production here in the United States?
So your question, excuse me, the question is under what conditions they should be able to benefit from the incentives?
Yeah, and do you see that as different from the way you framed it, which is whether, under what conditions should they be able to participate in the supply chain? And, the difference is step back and consider under what conditions should they be able to actually access the financial incentives and benefits that we put in place to encourage investment in EV vehicles here in the United States?
Yes, so I think my recommendation stemmed from the fact that there has been a lot of unclarity and a lot of confusion over whether these companies should qualify from subsidies in the United States, for example, and also from the fact that there has been increasing investments on the part of Chinese companies upstream in countries that then would qualify under FTAs for supplying critical minerals for the production of batteries that then would qualify for subsidies, right? So I think the question is not my question, I guess, or the question I raised is not so much that I don't necessarily have the exact conditions at hand, because I think they really depend on the segment of the industry, on the industry itself, and then on the companies themselves as well. But I do think it's worth raising the issue that we don't necessarily, it doesn't seem to me like we have a very clear framework of how to deal with Chinese companies as they internationalize. So that's what I was pointing to in my recommendation. I don't necessarily, I think if the two companies that we're talking about qualify, if they are meeting the legal requirements to be in the United States, then there's not much, I can say or do to say that they shouldn't be here, right? And neither can anyone else. But I think if policymakers think it is risky based on data, then they should certainly amend the legislation. I haven't seen anything that suggests to me that these companies are a risk to the United States. I think they're helping expand capacity, but I may be wrong, right? I may not have access to all the documents, and I think that's part of the issue here is exactly what types of investments we're talking about. I do think, though, that it's going to be unavoidable that we're going to keep seeing these questions coming up, and I think we need to just have a very clear framework. I think this is also going to be very helpful for American companies as they engage with Chinese companies to know what they can and cannot do. So I think there should be more of a clear framework on this sense. I hope that answers the question.
Sure, thank you. Dr. Gopal, do you have any thoughts on that question?
Yes, it's the same thoughts that I had on the previous one, sir. And that is, we have to decide when we look at investments and things like that, what our key priority is. Is it national security? Is it our own jobs and economy? Or is it the proliferation of one particular industry? And with that in view, I think, as Ilaria pointed out, we have no specific framework with which to analyze Chinese companies working here. But we never need to forget that the long view that the Chinese government takes is not necessarily how do we get the best EVs or green technology in the US. It's how they can profit by this over the longer term. And given that, I would say there's a lot of issues in allowing Chinese companies at this stage to be part of the spending, that infrastructure spending that we are talking about right now. I think we have to look at that very carefully. Over.
Thank you.
Thank you. Are you finished, Commissioner Goodwin?
Yes, thank you.
Thank you. Is Commissioner Hellberg there?
Yes. Thank you to all the witnesses for insightful testimonies. I wholeheartedly agree with one of the testimonies that too many parts of today's global supply chains were built to break and without any regard for national security. China's accession to the WTO was, in my view, one of the greatest single American foreign policy miscalculations in U.S. foreign policy history and fueled the rise of a hostile geopolitical adversary, the likes of which our country has never faced. But we are where we are. My question is addressed to all witnesses. If you could wave a wand and get the administration or Congress to do anything, what specific types of bills or executive orders do you think the government could take to administer a shock therapy to revive our manufacturing base and secure our independence in critical raw materials? Maybe we can start in alphabetical order with the witnesses. Okay, I don't know if I come ahead of Ilaria on this one, but by first names we do. I think, sir, that if I could wave the magic wand, I would have a few different things that we have to do, and none of them are surprises or anything else. Number one, I would increase our funding of US manufacturing infrastructure and the scope of it to build up the capacity we have lost. Number two, wave of the magic wand, we're having a few of these, would be to look very closely at the critical supply chains and, yes, impose some restrictions on who can buy into them, who can invest into them, and how we can protect them, both from the point of view of the supply chain and the technology that accompanies the supply chain. Third, I provide, with my wand, sourcing parameters that I would require our companies to look at and adhere to in terms of different products and industries as to where they can source, how much of a percentage can they source from a particular country, what their distribution is, what their diversification is, and what their regionalization of the supply chain should be.
And finally, I would hit the education front, where we've lost a lot of talent, where we've lost a lot of research. We're desperately short of STEM talent, and we need to emphasize and fund those programs. Thank you, sir. That's over.
And Mr. Gopal, before we move on to the next witness, what types of infrastructure funding do you view as being particularly contributive to manufacturing activity? Is it transportation as infrastructure, energy infrastructure? I'm curious if you're thinking about specific types of infrastructure that needs to additional funding, or are you referring to infrastructure as a whole?
Specific types, sir. Specific types. Firstly, transportation. All modes. Air, road, rail, and ocean. Ocean transportation is now controlled by a few companies, and that's a capacity and risk issue. Secondly, digital infrastructure. 5G, internet, satellites, global positioning systems, and the cybersecurity that supports them. That's a second piece. And thirdly, you brought up, sir, energy. I have no answer to the energy, nobody does, but I do know that we have to be practical and see what energy our industries need to be competitive, as opposed to telling them they should do this or the other thing. So those are the three issues that I would look at.
Thank you very much.
Thank you. I would agree on the R&D and education piece of that Dr. Gopal outlined. I would actually increase R&D in efficiency, efforts to improve efficiency on the usage of these minerals. Recycling efforts, there's a lot of potential there as well. Alternative chemistries for a lot of these, for batteries, for example. I think all these could then, certainly the research side of it could have more investment, but I think especially there should be a framework to help them commercialize, which is where China has really excelled and the United States has generally lagged, right? We generally have very strong research in American universities, and that doesn't necessarily get commercialized or produce a skill in the United States because that piece is missing, right? I know I'm talking about something that you're all familiar with. The second part is that I think there's a potential for more, and I think this is already happening, but it could be, I think, enhanced partnerships with other countries and collaboration and in seeking ways of, enacting de-risking. It just cannot be done only in the United States, right? I think autarky is neither desirable nor achievable in this sense. And then third, I think, the permitting reform conversation is the one that's important, and that's already undergoing. It's a complicated one, but obviously that moving that forward would be important.
Thank you.
Commissioner Price.
Great. Thank you both for your participation today. Several of my questions have been answered in part, so excuse me if I'm a little redundant. But before I get there, Dr. Gopal, in your recommendations, you talk about mapping of critical supply chains. My first question is, do we have the data that would allow us to do that? Number two, what already exists? And number three, we don't seem to have a whole lot of time. How long does something, when you came up with this idea, how long were you thinking this would take to do, and how do we implement? So why don't you go ahead, and Dr. Mazzocco, you can add in if you'd like.
Thank you, ma'am. Let me start with the last one first. How long do I think this would take to implement? I think no more than 6 months. This is an exercise that requires a lot of thought, but not that much data, because let's just take a simple one of semiconductors, the different types of semiconductors. We know it's critical. What are the industries they go in? We can get that from the semiconductor industry. What are the industries that depend on those? So semiconductors, drive computers, defense, all of these, which in turn drive airlines, tourism, information technology, and all of those, which in turn drive a whole lot of other things. I think we can map the cascading effects. The key here is mapping the impact. And that will require some modeling rather than much data. But I think that can be done fairly quickly with a solid task force. And I don't believe it should be made too complex, because complexity is always the enemy of action. And I think it should be made understandable and fairly simple so that you folks in the commission and the government can prescribe actions to work with the front end of those, the critical supply chains. I hope that answers your question, ma'am.
Do you think we have the data that we need, though?
I believe we do.
Okay, thank you. Do you have anything you'd like to add?
My sense is that a comprehensive analysis and data collection effort on the and the upstream side of critical materials would probably be, it would require some effort in collecting all the data, putting it all together. I don't question that the data is out there. I think finding it and making sure it's up to date and actually understanding what is happening on the ground. I think in many cases, the mining is happening in countries that might not have very good data. I think of the cobalt industry in the DRC, for example. There are, understanding which mines are open, which ones are, who is relying on artisanal mining, right? I think, there are efforts there and there is definitely data out there, but I think it might take, from my perspective, it might be a bit complicated by that. But that might not be what Dr. Gopal is suggesting. I do think it is important to have a sense of all the players involved. That might not be, completely comprehensive, but I do think my sense is that there is quite a bit of confusion at the moment due to not very good data on exactly which types of Chinese companies are involved at which levels of the supply chain and which foreign companies and what type of foreign investment, non-Chinese companies are also involved in those and who are partnering might be in some points with the Chinese companies as well as what the host governments are doing and how much they control some of the supply chain as well.
Thank you. Dr. Gopal, on one other question on clarification on the the recommendation you have about talent. Just a few minutes ago, you also said something about we need to restrict foreign enrollment. Can you clarify what you're talking about?
Absolutely, ma'am. So let me start from the top. Our universities today are getting increasingly dependent on foreign students, Chinese students, who pay full tuition. That's point one. Point two, there are disciplines that the government pays for research, that the universities do, that are critical to our national defense and to our economy in some ways. We have to vet seriously the students who we allow to enroll in that, so that this is not a revolving door and a straight pipeline back to China or Korea or Russia or wherever of our technology and the research. And as Ilaria pointed out, coupled with that should be the ability and how do we apply this and take it commercial and take it to use. So yes, the answer is we have to look at who we have enrolled into many of these disciplines in several of our universities and take a good hard look at that. Over.
Thank you very much.
Commissioner Shriver?
Just add my thanks to the witnesses. I think most of my questions have been addressed, so I'll pass.
Thank you. Commissioner Wessel?
Thank you. And Dr. Gopal, I appreciate your recognition of Rana and Barry's work. They've been toiling in this field as you have for many years. You referred to and used the term willful blindness, and I appreciate your recognition of the long-term work of this commission. But I would argue to you that willful blindness continues to cloud visibility as to many of the challenges we face. Recently, in appreciative of the work of the administration on an outbound investment executive order, it is still limited in terms of providing us the data on critical supply chains, batteries, pharmaceutical, et cetera. We have existing U.S. authorities that this commission has referred to in the past. For example, at the Department of Commerce, the power to compel any multinational business doing business in the U.S. to respond to questions. That could be used to provide us data on supply chains, whether it's in batteries, critical minerals, materials, aerospace. And you serve on the Defense Business Board, which I think has mostly been focused in the last couple of years on talent pipeline issues. But what new tools in terms of transparency and data do you think would be needed? Dr. Mazzocco, for you as well, I think, for example, Ford's efforts with CATL on Blue Oval, don't fully identify what's happening in the battery supply chain and the IP that is being utilized there. How do we get the data in a granular sense when business has been opposing, any of those data transmission efforts? Dr. Gopal, do you want to start there?
Yes, sir, I'll start. You've posed the question of the decade. In an economy like ours, how do we get business to help with the national profile? And we've seen what's happened in the past. The only way I can think of, from a purely simplistic view of an executive, is mandating the data, making sure that the data is going to be highly confidential, the security of the data, but in effect, mandating the data. And secondly, sir, it's looking at data as a tool and a weapon, because that's what it is. The warfare of the future is around data. So just not going overboard with asking every type of data, but asking for the little data that matters where we can make our decisions. I know that's a iffy-wiffy way of putting things, but it's actually true. We have so much data. We need to specify specifically what we need from companies so that you folks can make your decisions on criticality and policy. So it's focusing on the data and what data we have, because the data is there, the transparency is there. We need to focus on the what.
Let me pull on that if I can, because again, you're a member of the Defense Business Board, which has leaders of industry from CFOs to CEOs and otherwise, all of whom depend on data to make the right kind of decisions for their businesses. Should that be a higher priority at DoD in terms of supply chain transparency and transparency in a BPI sense? I don't mean that it has to be fully expressed, but we don't know where all the critical minerals come from or where the processing facilities are. China just became sold its commercial jets, the C919, and is going to be making further incursions into aerospace. what would you, as a business leader, need? And you can do this as a follow-up. And are you seeing enough within the defense establishment to be able to get the kind of data that's needed to make those decisions?
The short answer is yes, certainly. Everybody recognizes the data, the need for data, and what we call the infrastructure that the data needs. And yes, we may not have all the data you're talking about as a country. I don't believe we do, or as companies. But yes, I think we're on the path to getting that. But I still think that for the private sector, we need to mandate the turning over of the right type of data, because they collect it.
Dr. Mazzocco, a quick response.
I think it's a very broad question. I appreciate the challenge there, and I think there's different parts to that. I think, to be honest, if I have to pick something, what concerns me more is lack of transparency on Chinese companies. I think in the previous panel there was discussion about poor access to economic data in China. So if something that I would focus on, which I do think is data that is going to be increasingly hard to get, is the actual Chinese supply chains, and what which companies are operating in which sectors and their background when they're, for example, doing FDI in the United States. Something that I think came up with CATL, for example, recently. So I think that's one thing to focus on. That's probably going to require a lot of external research, auditing, and perhaps even some level of a high-level dialogue with China, right, with the Chinese government, because this is obviously part of an ongoing challenge there that may be undermining American and companies in the United States, in China, operating in China as well. So that's one piece of it. I think the other piece is, I think you mentioned IP in the CATL4 deal. I cannot speak to that, obviously, but I do think that's an interesting point. And that's, I think, points to something that indicates a reversal of previous concerns in the United States, where that American companies were giving away IP to Chinese companies, but now we are much more concerned about Chinese companies actually providing access to their IP to American companies. I think, again, that's something that should be explored and should be clarified in the legislation, right? I don't think there is any requirement for CATL to give its IP to Ford, for example. So I think if that's that's identified as a real challenge, and that's something that should be clarified, as I mentioned before, right? There's identifying actual goals and what companies can and cannot do in the United States is probably important. I think that's all there's time for. There's a long conversation. I'd be happy to have it at another point in time if there's more questions.
Thank you.
Thank you. Commissioner Wong, do you have questions?
Yeah. Dr. Mazzocco, thank you for your testimony. I'm just having, I don't know if you have it at hand because I'm having trouble finding the actual number, but what is the current Chinese tariff on U.S. auto imports?
I can't remember it off the top of my head right now. It's significant.
Yeah, I remember they raised it to 40% at some point in 2018, and then there were some reports they were going to lower it, but I'm not sure if they ever did that. And if it was a part of the phase one, I just can't remember. But suffice to say, I think there's at least still a 25% tariff on U.S. autos in China. There have been a long time disparity between the tariff we had placed on Chinese auto imports before 2018. I think it was like 2.5% before we raised it to 27.5%. But this goes to my question. I mean, would you agree with me that the Chinese advantage in EVs came out of a combination of a number of policy choices? One are the subsidies, the purchase subsidies you mentioned, which were tens, if not hundreds of billions of dollars. Second is protection through tariffs of their market, which is the largest automobile market and largest EV market in the world. The US is second. Number three, lower environmental standards, which allows them to refine and mine critical minerals at a much cheaper rate, as well as lower labor standards. And I think importantly, at least at the beginning of the EV industry in China, the theft of intellectual property from Western companies, and particularly American companies. Are those factors correct in what has built the Chinese advantage?
I think, yes, they all played a role. I would say also they came at the right time. Right, I think these policies were initiated around 2010, and by 2015 we started seeing the technological advancements in a lot of these areas, and at the same time Chinese consumers were really interested in EVs, which is something, to be honest, I don't think many even predicted in China. So I think there's a convergence of various factors, but I think the ones you mentioned all played a role. I would say that the tariffs into China probably were especially significant in ensuring that companies invested domestically in China to produce capacity. Certainly, I think that was the case for Tesla, for example. Right. And one more thing, I think, to qualify for subsidies in China, the vehicles had to be produced in China.
Okay. And if I'm not mistaken, I think the tariff levels between the United States for a long time, between the United States, the tariff levels that China applied to the United States versus those they applied to European cars, they actually had higher tariffs on U.S. cars for a long time, and I think still do. Am I right about that?
I actually am not sure. I'm sorry. I don't have that data at hand.
Yeah, we'll research that. That goes to my question. I mean, would you agree then there's kind of I think there's clearly a strategic valence or a strategic impetus behind these policy choices. Namely, it seems that there's a conscious decision by the Chinese to develop, obviously, an industrial leadership position in EVs, but in particular to build dependence throughout the Western world, including in America, on these technologies, but also to undermine the U.S. industry. Is that correct, or would you disagree with that?
I would say that when the policies were first launched, the actual focus was to reduce China's dependence on foreign technology. So this was very this was very clear. They identified a technology that where Chinese companies stood a chance to compete more directly with Western and the non-Western, foreign automakers. Since the 1980s, there had been several policies in place in China that aimed to do that and had completely failed in the internal combustion engine vehicle industry. So, for example, the reason why there's so many joint ventures between foreign companies and Chinese companies is because that's mandated as an effort to help Chinese companies upgrade, and that never really led to their advancement in the industry. So by shifting towards electric vehicles and investing in electric vehicles, the hope of the Chinese government would be that a more, obviously we've talked about how this is not necessarily a homegrown industry, but a homegrown technology, but a technology that was developed further in China and where supply chains could be more controlled by Chinese companies would reduce their reliance on American and European and Japanese automakers. So I would say that's most certainly what happened initially. I think as the time progressed and as the industry really took off, and I should note that I think based on my research, when these policies were first launched, they were fairly obscure and not necessarily something that most of the Chinese government was focused on. But after a few years, they really took off. The market was really developing, and I think that's when we see more of an understanding of the potential of this industry as an export industry. And I think certainly now, I'm sure there are considerations about how this could be increasing foreign dependencies on China in line with dual circulation. But I don't think that was the case originally.
Okay. I appreciate your answers and the suppleness of your research. I just think a lot of these factors we'll have to consider, and I am very worried and question the wisdom of what I see as the current trend in the United States of adopting policies that essentially dovetail with that strategic impetus of China, namely subsidies for purchases of EVs in the U.S., outright bans on internal combustion engines, and either bans on or extremely difficult permitting processes for mining and refining here. That would seem to back us right into the strategic pocket of what the Chinese are trying to do in the EV industry. I think we have to take a very strong look at that. But thank you for your testimony.
Thank you to our witnesses. This is the last hearing of unless somebody else has some burning issue. This is the last hearing of the year. We will begin, we are in the process of wrapping up the annual report, but we very much appreciate you coming and offering your observations today. So with that, the hearing is adjourned.
Canyon, Shuswap, Okanagan, and more. We have our first assessment in from West Kelowna only, that at least 50 structures are confirmed destroyed by fire in that area. This is a first formal assessment. It's reasonable to assume that most, if not all, of these structures are homes, which means that these homes are gone. These are families who have lost everything. It is also probably news that is only going to get worse as assessments continue. This is just our first assessment out of West Kelowna. There are other communities that have lost homes, and those assessments will come in, and that information will be provided as it becomes available. A heavy urban search and rescue team is now working in the Kelowna area, providing those assessments to local government to get that information and those answers to people who are waiting for that news. And in order for us to be able to move people home when they can and when it's safe. Tomorrow, I'll be traveling with Minister Ralston and Minister Ma to fire-affected areas. Our goal is to reassure people that we will be there when the crisis passes to help them rebuild, but also to get information from the front line about what communities need to ensure the government is as responsive as possible. We're working closely with the federal government as well on supporting people in the aftermath of this horrific disaster that they are facing. For British Columbians, we need everybody to really do their part right now. Listen to and respect the travel order. It is critical that we keep the roads clear, that we keep the hotels available for people, and be cautious out there. It's a very dangerous and fluid situation still. Please understand this is a very stressful situation for people in these local areas. The last thing they need is disaster tourists coming and interfering with rescue efforts. We need to understand that people in these communities need the compassion and concern of all British Columbians, and certainly that is what we're seeing. Unfortunately, we are getting reports that some people are tampering with firefighter equipment, moving it to different locations where they think it might be more needed. We'll put the best possible understanding on this, that people think they're helping. They are not. You're not helping if you're moving firefighter equipment. Firefighters are experts. The equipment is put there for a reason. And when it's not there when the firefighters go to get it, that is a big problem. So please do not tamper with firefighter equipment. We have also had isolated reports of mischief in some areas, including theft. And so there will be increased enforcement by the RCMP in areas where we have seen those reports. In closing, I just want to say that we're very grateful for the hope that's been provided to community members by frontline firefighters who are putting their lives on the line to support community members. It is hard-earned, and there are local government officials and First Nations leadership and members who are on the front lines supporting right now, getting information out. Thank you to everybody who is doing that critically important work across the province right now. There's also an incredible amount of hope coming from the actions of British Columbians supporting each other. We've seen people donating blankets, pet food to people that are in emergency shelters, in evacuation sites, looking after pets, looking after livestock. Just so great to see British Columbians coming together like that. The firefighters in Scotch Creek lost their fire hall, and they are still on the front lines fighting fires right now. It's a shared fight out there right now. We'll get through it together. And I'm very grateful to everybody who's helping to respond in every way that they can. With that, I'll turn things over to Minister Ma for her update.
Thank you so much, Premier. Hello, everyone. I'm honored to be speaking to all of you today from the territories of Musqueam, the Squamish, and the Tsleil-Waututh peoples. First and foremost, I want to express my heartfelt condolences to everybody impacted by the ongoing wildfire situation. Those who have learned they have lost their homes and belongings in the wake of the devastating fires that we've experienced over the past weekend, and those who are still waiting for news. The pain, the sorrow, the uncertainty that you must be feeling is immeasurable, and I want you to know that we are with you during this incredibly difficult time. I'd like to recognize the heroic efforts of the BC Wildfire Service firefighters, local department firefighters, and volunteer firefighters who have worked tirelessly over the past 72 hours and all season to protect people and keep communities safe. Some of these brave firefighters had to witness their own homes succumb to flames while they turned their attention to protecting the homes of their neighbors and fellow community members. To go through that emotional toil while selflessly protecting the homes of their neighbors and community members speaks to the character of our firefighting community. These brave men and women are demonstrating the meaning of courage in the face of the worst wildfire season in British Columbia's history. I'd also like to acknowledge our RCMP officers, emergency management personnel, emergency support services personnel and volunteers, healthcare professionals for working throughout the weekend to protect people. Amidst the challenges that we are facing, the spirit of the community throughout British Columbia has been a shining beacon of hope. The stories I've heard of the generosity and compassion provided to support people and families has been inspiring. People have opened their hearts and their homes to their neighbors. Businesses and restaurants have been bending over backwards to support their communities. I know many of the accommodation providers, restaurants, and other businesses have extended their hours to accommodate the needs of the people. People from all walks of life are coming together to care, protect, and support one another. This is a team effort, and it is exactly what we need. Thank you. As of this morning, there are more than 27,000 people under evacuation order and more than 35,000 on evacuation alert. This highlights the scale of the challenge that our emergency management teams and first responders are facing. Their coordinated efforts have been nothing short of remarkable. The wildfire situation continues to be extremely serious, impacting tens of thousands of people. I know that some people in the Kelowna area have had to wait at the emergency reception center during this difficult time. Evacuees waiting for services have been very patient as local authorities work through this monumental effort. We have been taking action along with the local authority who runs the center to get support to people faster. The number of emergency support volunteers on the ground in Kelowna has been doubled since Friday. There are now more local volunteers working as quickly as possible through evacuee applications. And to help speed up this process and ensure that everyone has a place to stay, we are also we have already started to send evacuees from the queue to their accommodations immediately. Some people started getting phone calls and emails yesterday afternoon with these direct accommodation placements, and the local authority expects that process to be complete today. Emergency support services volunteers will then follow up over the next couple of days to formalize the referrals process. Several communities have also stepped up to provide virtual supports in order to help register people, and we're very grateful to them. When possible, I'm asking everyone in the interior, as well as the Southeast and across British Columbia, to please pre-register with emergency support services online at ess.gov.bc.ca. I want to thank people for their patience during this difficult time. Everyone will be taken care of. We hope that the darkest days are behind us, but the situation is still evolving and the dangers we face are still extreme. By taking the steps to be prepared, by following evacuation orders and alerts, you are doing everything that you can to protect your community. Please continue to be prepared. Have an emergency plan and a grab-and-go kit ready for you, your family, and your pets. Your First Nation or local authority will provide information on evacuation routes and evacuation reception centers where you can access emergency support services. I know that this is said every time that we are up here, but it bears repeating because I cannot stress it enough. If you are under an evacuation order, you must leave immediately. This isn't a suggestion, it is the law. You may think that you are helping yourself or your neighbors by staying behind or supporting individuals who are staying behind with food or supply runs, but you are not. You're making a highly dangerous situation even more dangerous for everyone involved. I want to thank everybody who has been heeding the evacuation orders and leaving in a safe and orderly manner. But for those who are not, heed this call. Leave. Do not stay behind. On Friday, we declared a provincial state of emergency given the severe and fast-changing circumstances that we are in. This declaration gives the province extraordinary powers to keep people, communities, and first responders safe. And on Saturday, we issued an order to restrict travel to a number of communities in the Okanagan for the purposes of staying at short-term accommodation. We need hotel and motel rooms available for people and families that have been forced to evacuate and for our frontline responders as well. The affected areas of this order include Kelowna, West Kelowna, Kamloops, Oliver, Osoyoos, Penticton, and Vernon. So let me be clear. Temporary accommodation in the areas I have listed is no longer available for non-essential visits. Thank you again to people for heeding our calls to stay away from fire-impacted communities entirely. Your compassion and your quick action has made a huge difference. We continue to ask everyone not to travel to the Okanagan or the Shuswap for tourism or other non-essential purposes. Parts of the Fraser Canyon are also struggling. With that being said, conditions have improved in the southeastern portion of British Columbia, and I know that communities there are looking forward to welcoming tourists. So we are no longer asking people to stay out of the southeast in its entirety, but there is still a need to recreate responsibly. Study the wildfire maps, check Drive BC before you go. Understand that the risk of new wildfires and changing conditions still exist, and pay attention to the needs of the local communities that you are visiting. We all need to give BC Wildfire Service personnel and for emergency responders the space that they need to keep us safe. Before I turn it over to Minister Ralston, I'd like to thank the federal government for approving our request for federal assistance to provide additional Canadian Forces assets and other federal resources to assist with evacuation, staging, and other logistical tasks. The federal government has made a military camp in Vernon available as accommodation for evacuees and a strategic facility for firefighting operation. We expect it to be open today. The Heavy Urban Search and Rescue Task Force is in the Okanagan and the Shuswap. They are assisting the regional districts with damage assessment. I would also like to thank the Silcotin National Government for proactively opening a group lodging center in Brisk Creek to accommodate their members and Indigenous peoples across the province as needed. The level of coordination and cooperation we're experiencing across governments, First Nations, and emergency personnel is unprecedented. And I know right now a lot of people have also been asking how they can help. The outpouring of support from food banks, community organizations, and non-governmental organizations has been nothing short of amazing and inspiring. The Canadian Red Cross and United Way, British Columbia, are among several organizations that have joined this effort. Additionally, the BC SPCA is providing emergency boarding for pets of evacuees and has pet food and supplies available for those in need. To view a list of other registered charities that are helping to collect donations, please visit canadahelps.org. Thank you, and I will now turn it over to Minister Ralston.
Thank you, Minister Ma. Good afternoon, everyone. I'm Bruce Ralston, Minister of Forests. I'm honored to be here on the territory of the Musqueam, Squamish, and Tsleil-Waututh peoples. Let me echo the words of the Premier and Minister Ma. My thoughts are with every person and family impacted by the wildfire situation. Our priority is keeping people safe and responding to the emergency. I, too, wish to thank all those fighting the fires and recognize their tremendous work. These last few days have been the most difficult days fighting wildfires in BC's history. While we have experienced great loss, the homes and communities saved this weekend in the face of grave threats is a testament to the skill and determination of all those working to fight those fires. To have your community, your home, under threat of fire is extremely stressful and challenging. That said, we have had reports, and the Premier mentioned this, we've had reports of some members of the public taking or moving fire equipment. This is not acceptable under any circumstances. When someone takes or moves fire equipment, they put their community and their neighbors at risk. Our first responders are literally putting their lives on the line to protect people's homes and livelihoods. They should not have to be concerned about whether their equipment will be there when they need it. I know the overwhelming majority of people are doing their very best to support fire crews. I implore the others to stop, consider the needs of the families, businesses, and communities that they endanger by interfering with the firefighting effort. Again, I know that almost everyone is taking the actions needed to keep our firefighters safe. And I know many thousands of people are making deep sacrifices. Whether you are immediately impacted by an evacuation order or alert, or were anxiously checking on loved ones in impacted areas. It has been a long, stressful wildfire season for too many, and our hearts are with the people, communities, and First Nations impacted. We are doing everything we can and using every resource available to ensure people in British Columbia are kept safe in communities across British Columbia, in Shuswap, Central and South Okanagan, the Fraser Canyon, the North, the Southeast, and more. I know Cliff and the BC Wildfire Service can speak to how resources are deployed to tactically take on the fire situation. There are currently 386 wildfires burning across BC. 14 of those are fires of note. We continue to have approximately 3,500 personnel directly engaged in wildfire response efforts across the province. They are joined by hundreds of members of municipal fire departments assisting with structural protection and defense. There are now more than 652 structural firefighters deployed in coordination with the BC Wildfire Service right now. This is a record number for joint wildland and structural firefighting response in this province. I'm also pleased to update that on Wednesday this week, 100 additional Mexican firefighters will arrive in BC. And in the days following, 200 South African personnel will arrive to assist in local firefighting efforts. Australia is once again stepping up to support with 18 specialized single resources, such as division supervisors, equipment branch directors, and helicopter coordinators. We are immensely grateful to all our partners who continue to show up when we need them most. I know that the workload is challenging, but I am confident we have exactly the right people in place to manage this response. I'd also like to thank the federal government for making the military camp in Vernon available as accommodation for evacuees and a strategic facility for firefighting operations. Although the road ahead is still immensely challenging, we are fortunate that the weather forecast is more positive for most areas. There's also some rain possible for southern British Columbia in the coming days. Although it won't be the days of solid rain that we really need, it may be enough to allow fire crews to make more headway on the fires. Cooler temperatures, some rain, and less wind in the forecast, we remain hopeful while we continue to prepare for difficult conditions. I'd like to finish with a brief message to everyone on the fire line and everyone involved in this huge effort, from our wildfire crews to the contractors and the municipal firefighters from around BC. I know you are tired. The days have been long. The work is exhausting and demanding, and the fire season isn't even close to being over yet. On behalf of the people of British Columbia, let me say, we support you. We are thankful for the heroic work you're doing, and we continue to be grateful for your unwavering commitment to keeping people safe. Thank you. And now I'll turn it over to Cliff Chapman.
Minister Ralston, Premier and Minister Ma. My name is Cliff Chapman. I'm the Director of Provincial Operations for BC Wildfire Service. I'm honored to join you today from the traditional territory of the Tecumloops de Secwepemc, where I live and work today out of the Provincial Wildfire Coordination Center in Kamloops, BC. I would also like to extend my empathy and the organization's empathy and understanding of the anxiety and stress that is inherent with fires that are impacting communities. We know that it is stressful. We know that you need information. We're doing everything we can to both get you back into your home as well as provide information about what the fire, what our plan is to attack the fire, as well as what has happened. Today, I'm going to go through a run through like I have on the last couple of availabilities, where I'm going to walk us through with some visual aids, maps to show you what has been transpiring on the fires. But before I do that today, I also just want to thank members of the public, the communities that are impacted, the communities that are supporting those that are impacted. Here at BC Wildfire Service, we are receiving letters, emails, phone calls of appreciation. And I know that's happening locally within our fire camps as well, and even at gas stations when our crews are filling up their trucks. You have no idea how much this means to our organization and the people who are working in it. It is that type of recognition that keeps them going, on their 5th, 6th, and 7th deployments of the year this year, as our fire season started so early and has continued now up until almost the end of August. I encourage everyone to please do that, continue to do that, continue to thank those that you see that are actively engaged in response, actively engaged at your local EOCs. It means the world. I also want to address two pieces that have come up in the last couple of days around some challenges and some questions that are out there within the media, but I think more importantly within the public. Recognizing that fire is extremely stressful, and when we see impacts like we are seeing in West Kelowna, in the Shuswap, in the Fraser Canyon, there's a lot of stress and anxiety about what happened and what are we doing now. And I appreciate these questions, and rest assured we are doing everything we can to try to provide BC with as much information that we have on, one, what happened, and secondly, what we're doing now. I want to address the first part, or the first question here, which is around prioritizing resources for the McDougall fire, and only the McDougall fire. Let me be very clear. We are not only prioritizing the McDougall fire in West Kelowna and Kelowna. We have multiple priority fires across the province, particularly centered in the southern portion of the province, including but not limited to the Adams Lake Complex, Kookapi Creek wildfire, the Bender Complex, which is in and around Lillooet-Lytton, as well as the fires that is in the Ashnola and a couple in the southeast. For clarity, we have 164 people assigned to the McDougall Creek wildfire in Kelowna and West Kelowna. There are 385 people assigned to the Adams Lake Complex. There's over 130 people assigned to Kookapi Creek, and there's over 180 resources assigned to the Bender Complex in the Fraser Canyon. We evaluate daily ground operations and make decisions on moving resources based on where the most potential and significant impact of the fires will be to life and property. That will continue for the rest of the fire season, and we will see numbers go up and down based on what those potential impacts could be. The resources that Minister Ralston referenced coming into BC will be assigned largely to the fires within the Kamloops Fire Center and the Fraser Canyon, and we will see those numbers of resources tick up from where they are today. The second piece I want to discuss is around an operational tactic that we refer to in wildfire as planned ignitions. Planned ignitions, for clarity and in fairly simple terms, is where we will build and or utilize an existing control line, something that is unflammable, a power line where we might use heavy equipment to get down to mineral soil, a lake, a highway, or any variation of that. That was what we would call a control line. We build it in front of the head of the fire, the main body of the fire, and then we conduct a planned ignition utilizing weather experts, fire experts, and operational experts based on what weather is currently on site and what weather is coming. The goal of a planned ignition is to work from the control line to the main body of the fire and remove all fuel by burning it. The main body of the fire generally has wind that draws into it. And so when we light off of the control line, it pulls the fire back into itself, thus eliminating fuels between the main body of the fire and anything past that control line. I want to specifically talk about the Adams Lake, Lower East Adams fire. We did conduct a planned ignition on that fire last Thursday. We did it cautiously. We did it knowing that there was a cold front coming. As BC is aware, we discussed the cold front coming on Wednesday and Thursday. We knew the winds were coming. As those winds were approaching, going through the Caribou Fire Center, there was a continuous line of fuel between the main body of the fire and all of the communities along the North Shuswap. We did our planned ignition under the conditions in which we planned for, and it was largely successful. I want to be perfectly clear. That planned ignition saved hundreds of homes and properties along the North Shuswap. Unfortunately, with the wind that we knew was forecast and that was coming, that fire went above the control line that we burned off from and then swept back into the communities in the North Shuswap. We were still successful in protecting some of those properties along the North Shuswap in the hundreds. Unfortunately, we've also now seen the devastation the main body of that fire had in areas like Scotch Creek, Solista, and others. And our hearts go out to those individuals who have seen the devastating impacts of that fire making its push. Our planned ignition is used quite frequently in BC. It is also used across the globe. When conditions are as dry as they are in a year like this in BC, traditional firefighting tactics like water bombers and ground operations will not be successful. Eliminating the fuel is, in a lot of cases, the best way to try to protect any infrastructure and values ahead of the front of a fire. And when we know that there's 40 to 50 kilometer sustained winds coming, we knew that we had to eliminate that fuel. And again, I would like to stress, it was largely successful and it protected hundreds of properties in the Shuswap area. I also would like to just make one point of clarity that it was not our planned ignition that allowed the two fires in the Adams Lake area to merge. It was actually the cold front winds that pushed the fires together and merging them towards Highway 1, which ultimately ultimately led to the closure of Highway 1. So I just want to thank everyone for hearing me out on those two pieces, and now I'll go into a more thorough operational update. So as we sit today, we do still see some extreme fire behavior being observed throughout the province. Right now, we have not seen extreme fire behavior observed within the McDougall complex, and we have seen actually a drop in fire behavior on the Adams Lake complex as well. Where we continue to see aggressive fire behavior is in the Fraser Canyon, and that's due to the sustained winds of the valley and the valley orientation north to south in that valley. Continue to see a large response presence in that valley, but with it, we're still seeing some aggressive fire behavior. Starting in the Adams Lake complex, again, just for clarity, the dots are somewhat of the growth over the last 72 hours. Anything that's more colored in red was the perimeter of the fire pre last Thursday's cold front passage. So you can see how much this fire has moved over the course of the last couple of days, mostly on Thursday and Friday last week. You can see that it has crossed Highway 1 and is just sitting in between Chase and Sorrento on that side, as well as you can see where some of the fire growth has been to the north and northeast towards the Shuswap. We are fortunate, and I'm happy to report that with the change in weather conditions, we are able to get heavy equipment out on the ground. We've had the ability to get our ground resources back on the ground. Challenging for us on this fire today and likely tomorrow is going to be smoke impacts. Anyone who lives in the interior in Kamloops knows that we have a heavy blanket of smoke right now, and visibility and Transport Canada regulations. It's going to be touch and go how much we can fly in the next 12 hours, hoping that with a little bit of precipitation potentially coming, that we may see that smoke clear, and it'll allow us to get our aviation fleet back in the air. Moving down to what we're now calling the Grouse Complex, which is West Kelowna, and Lake Country. Very successful operational day on these fires yesterday. As you have likely seen, we were able to recommend making some orders back into alerts. We've also had a lot of success with our ground operations, pushing heavy equipment around these fires and trying to ensure that we can contain them so that no matter what the weather brings in the coming days, that we have the ability to operate off of our containment lines and try to keep these fires in their box and not see any more impacts to communities and infrastructure. On this fire in particular, as well as in the Adams complex, it would be amiss if I didn't thank municipal fire departments, local governments, First Nation governments for really stepping up and partnering with BC Wildfire Service. We cannot do this alone. We need that partnership. We really all have to show up to try to get people home and do it in a safe way. The Bender complex, which I spoke about in the Fraser Canyon, where we are still seeing quite significant fire behavior. On the left is the Downton fire. That fire has seen a bit more growth and has some challenging SPS in Goldbridge, Gun Lake, as well as now starting to see needing additional resources, structure protection resources for the communities up and down the Fraser Canyon, just to be safe. With fires to the north being the Bender complex and fires to the south being Kukipi Creek. Quickly just touch on the Crater Creek fire down by Lower Similkameen Indian Band and Karamias. Some good news on this fire as well. While the fire did push into the United States, we have a strong partnership with the United States. We're working together on that end of the fire, as well as where the fire is situated currently above Karamias and LSIB. We had a fire there I believe 3 years ago, quite a substantial fire. And so the main body of the Crater Creek fire is not able to continue to burn towards the Highway 3. So some successful tactics going on this fire and continue to see a little bit of growth, but nothing significant. Upper Park Real Creek fire, just outside of, going back. So this fire is roughly 1,100 hectares. We did see a little bit of growth in the last 48 hours, nothing substantial, and we are having good success on the ground on this fire with heavy equipment, ground resources, and yesterday we were able to fly aviation assets on it. So roughly 1,100 hectares. We're feeling fairly confident with our operation on this fire, and again, thanks to the strong partnerships that we have in the area. Kukipi Creek fire in the Fraser Canyon. Obviously this fire, it was last Friday that it made a significant push across the river and across Highway 1. We are still seeing the challenges of the valley orientation coming out of the Nahatlatch, which runs east to west into the Fraser Canyon that runs north to south. And so you can see this fire has made some push to the north towards Kanaka Bar. We haven't seen a lot of growth to the south, and we have seen some growth over to the east. We do have some operable ground, although it's very steep in this valley. We do have some operable ground to the north and to the south. A little bit more challenging as it gets into the steep draw canyons across Highway 1. But we are making a plan and working with the local communities to ensure that that plan works for everyone in that valley. Just quickly touch on resourcing. As discussed, we have roughly 3,500 people engaged in fire response across the province today. We do have 100 Mexican firefighters arriving on Tuesday, 200 South Africans at the end of the week, and additional single resources. Continue to see a large rotary wing aviation fleet with 128 helicopters, 35 air tankers, and we are starting to see record-breaking numbers in terms of BC Wildfire Service in terms of structure protection resources, with 288 out in the field. Again, thanking municipal fire departments for their support of this effort in a very challenging fire season. And we have flown just about 800 air tanker missions in 2023. In 2021, which was also a very challenging fire year, for the entire season, we flew 800. So we are likely to break that record here today, as long as the smoke lifts and we're able to fly. So that's the briefing for today. I want to thank you very much. And Premier Eby, I'll allow you to take questions.
Great, thanks.
Allow you to take questions.
Great, thanks, Cliff.
Thank you for joining us today. We're going to begin with some questions in the room and then going to questions on the phone line. For those on the phone line, please press *1 to enter the queue. All members of the media will be limited to one question and one follow-up. We'll begin with Ben Leger from CTV News. Go ahead, Ben.
Thank you. My question is in regards to the travel ban, a two-parter here. There is some confusion about short-term rentals such as Airbnb. Do they fall under this travel ban as well? And then also bigger picture, this is prime tourist season for the Okanagan. Tourism operators tell us they're doing their part, but they are already looking ahead and wondering if there will be financial compensation for the losses that they may incur, whether that be hotels or tour operators.
Okay, thanks for the question. So for Airbnb and people who host on Airbnb, we're really asking them to take the same approach that we're asking commercial hotels to take, which is to have understanding about the fact that we're asking people not to travel to the area, not to be tourists in disaster areas in the province, and to be flexible around refunds. We're calling on the company to be supportive of that, and certainly people who are hosting to be supportive of that. That's our expectation. The formal definition of temporary accommodation in the order does not include Airbnbs, but I think it would be a bit of a stretch to think that you should be traveling to these areas if you have an Airbnb booked. The answer is do not travel. Do not go to those areas. And for those companies and those individuals who are involved with Airbnb, we ask them to be flexible and understanding and support people. In terms of support for the tourism sector, absolutely we'll be supporting the tourism sector. They're facing significant impacts. One of the immediate realities, though, is that the hotel rooms that are coming available, is when they become available, they're being snapped up by the province so that we can provide accommodation for firefighters and for people who've been evacuated from their homes. And so the business is shifting from tourists to accommodating frontline responders and families, individuals who are in emergency response centers right now. And so very grateful to the Hotel Association for working with us, hotel owners working with us to be able to ensure that there's a tight link between that accommodation becoming available and moving someone in right away so we can get them out of a gymnasium or a community center or whatever and into at least a hotel room. Okay, thanks.
Ben, do you have a follow-up question?
I do. In recent years, many British Columbians have come to rely on social media networks to get news articles, to share news articles. Obviously, Facebook, Instagram are no longer allowing Canadian news content to be shared on their platforms. Is the BC government finding it difficult to get its message out to people? Do you have concerns with the ban on Canadian news content on these platforms during this time of immense disaster?
Well, this is a time in British Columbia where people are pulling together, whether they own a company or whether they are opening their home up to friends, relatives, or sometimes even strangers to support neighbors with livestock, to support people who have pets, and everybody pulling together. I heard a story this morning from an MLA about a guy who owns a fuel company who saw that a pump needed fuel and he didn't have the authorization yet to put the fuel to keep that pump going. To cover the cost of that fuel, he went ahead and fueled it up so that we could work it out later. That is the approach of companies that we're seeing in British Columbia. I find it astonishing that we are at this stage of the crisis and the owners of Facebook and Instagram have not come forward and said, look, we're trying to make a point with the federal government, but it's more important that people are safe. It's more important that they have access to basic information through our networks, and then we can deal with our concerns with the federal government and their new laws later. I call on Facebook again. Mr. Zuckerberg, open up access to Canadian media so that British Columbians can share critical local information so they can be safe. It's incredibly frustrating to me that we have to be making this call at this stage in the crisis. But I hope that that common sense prevails there. But currently, it seems to be in short supply.
Our next question, we're going to go to the phone lines with Richard Zussman from Global News. Go ahead, Richard.
I'm not sure who this is for. It may be for Cliff. Residents are trying to get supplies into communities trapped near Anglemont by boat. They've apparently been blocked from doing so. What can you say to people to reassure them that the supplies and services are getting to the communities that need them? And Cliff, to the issue you were speaking to earlier about that controlled burn, how confident are you that no additional homes were lost due to the decision made around that burn?
Okay, thanks, Richard. I'll turn that over to Cliff to take the second question first, and then members of the public services. Someone can answer that specific question about Anglemont.
Thank you very much, Richard. It is a really good question, and I guess I would say I am very confident that planned ignition went ahead under the right planning context to remove fuel between the main body of the fire and the communities in the North Shuswap. I am confident it was not our planned ignition that made that fire move into the North Shuswap. The winds were 40 kilometers an hour sustained. We saw that fire make a 22-kilometer run around our planned ignition. I am confident that that planned ignition removed fuel and saved homes.
Ian Cunnings from EMCR will be taking the next question. Go ahead, Ian.
Great, thank you, Premier. My name is Ian Cunnings. I'm the Senior Director for Response Operations for Emergency Management Climate Readiness. In terms of resupply, EMCR Regional Operations Center out of Kamloops is working closely with local government EOCs. And if there were a need for assistance with that local government EOC, we would then provide that support. So we would just encourage concerned residents to get in touch with their local government for that support. Thank you, Premier.
Thanks, Ian.
Premier.
Thanks, Ian. Richard, do you have a follow-up question?
Premier, I know we're in the very early stages here of what comes next for the people of Kelowna and West Kelowna and the entire region. But is there a guarantee from you that this will not take the same amount of time as the people of Lytton have experienced as they are still waiting to get back into their homes? You know, what sort of commitment will there be to be rebuilding here in this community?
Well, we'll be working incredibly closely with local authorities. We're already working closely with the federal government to ensure that those families, starting with the news we got today of the 50 structures that we lost in West Kelowna, most of which are likely homes, making sure that people are supported. The bad news is going to continue to come in. Family homes destroyed across the province due to fire. As you heard from Cliff, as you heard from Minister Ma, this is still a very serious and volatile situation. We are not out of the woods yet. And the government at all levels, local government, provincial government, and federal government will be working together to ensure that people are looked after and supported.
Our next question is going to come from Rob Shaw from Czech News. Go ahead, Rob.
Hi there. I know this is a bit of a delicate question, but are we sure that everyone is okay? Is anyone missing? Are we worried that anyone has been killed in any of these fires or can't be accounted for, or how do we know that?
This is, Rob, implicit in your question is that this is an incredibly dangerous situation. When Minister Ma says, you get an order to evacuate, please evacuate. Certainly do not go into an area that's under an evacuation order. That is the highest level of risk for your own life, for the lives of first responders that are going to try to fight that fire. Because all of a sudden they're going in to try to get somebody out that shouldn't be in the area in the first place. That is where the danger to life and safety is the absolute highest. With that, I'm going to turn it over to Cliff to provide any information he can from the front lines about any reports of missing people or anything like that. Cliff?
Thank you, Premier. And you're right, it is implicit. It was a very scary situation that occurred last Thursday and last Friday with that type of wind sustained through the night into the darkness, evacuation orders going in, obviously. At this point in time, we have not been made aware of any impacts to humans, but that doesn't mean that we may not in the coming days. Obviously, we continue to focus on trying to protect the structures that are standing, focused in on the response to those fires. And Ian, I'm not sure if there's anything to add from EMCR, but there is nothing that's come across BC Wildfire Services organization in terms of your question.
That's correct, Cliff. We have same info, nothing to add. No reports of missing persons into EMCR. Thanks, Premier.
Tim.
Then Rob, do you have a follow-up?
Tim.
Then Rob, do you have a follow-up question?
Sure, thanks. I guess back to Cliff on this. You've talked about thanking the communities that have sent municipal fire crews. And I'm just wondering if you could expand a bit on, you mentioned structural protection. Like what can you do with these crews that you couldn't do without them in terms of firefighting? What does it mean to have them there, and how useful is it in terms of actually protecting homes?
Thanks, Cliff. I think this is one for you.
Really, there is a distinct difference between municipal fire departments and what BC Wildfire Services, both training, experience, and really mandates are to accomplish within BC. And that's why it is so imperative for us to work in true partnership and unified command as we are on the McDougall fire, and working closely as we are in the Adams fire and fires across the province. When we call in municipal fire departments, they support us in our structure protection, which is the deployment of sprinklers, pumps, mass water delivery systems, quite a complex system to try to reduce the relative humidity in and around the community, as well as directly spray water into the fuels so that the fire has less fuel to burn in an ideal situation. The municipal fire departments can also fight the structure fires. So when we see the impacts like we did in West Kelowna, when we see the impacts like we did in the Shuswap, municipal departments are trained in structure defense, and they are able to actually suppress the homes that might be on fire. I think this is one important piece, because wildfire, the BC Wildfire Service firefighters, while they can support the deployment of sprinklers, they are generally focused on trying to steer the fire away from the community, and using our suppression tactics to keep the fire out of communities. And that's why sometimes when you see within West Kelowna or perhaps around the Shuswap, you may not see the BC Wildfire Service reds and blues. You might see municipal departments, because that is their area of expertise. Our staff are in the forest trying to steer that fire, put in containment lines, use heavy equipment. So it really does have to be a partnership, and there is a difference between what the two types of crews can do. Obviously most effective when we work together, and that's what we're doing right now.
Our next question will come from Joe Ruddle from the Vancouver Sun. Go ahead, Joe.
Yes, hi. With these wildfire seasons getting worse here and everywhere, are there fire prevention strategies and or technologies being used elsewhere in places like Australia that BC is studying and considering adopting here?
Thanks for the question. Thanks. So in terms of fire prevention strategies around wildfire, the interface areas between forests, where wildfire areas are, and homes is a critical prevention mechanism. We put additional resources into expanding the areas where trees are removed and interface areas with communities. It's also had the added benefit of providing wood to mills in British Columbia. given the impact that forest fires and pine beetle have had on our forest industry. It's one of the initiatives we put in place to both support the forest industry, but also to prevent forest fires from spreading into urban areas. There are also building code provisions that can be taken to reduce the risk of wildfires spreading in urban areas, including sprinklers and the materials that are used in the construction of buildings. There was a lot of discussion about that in the discussion about what would be allowed and not in the reconstruction of the city of Lytton, for example. And the public service that's responsible for the BC Building Code and the National Building Code, I'm sure, will be taking note of these impacts as they did following the fire in Lytton to determine whether or not our building code needs to be amended in certain areas of the province.
Joe, do you have a follow-up question?
Yes, this one might be for Cliff. Is there still a concern that the remnants of Hurricane Hilary could create strong winds and exacerbate some of these fires?
I would say the remnants of that hurricane, it's a bit of a double-edged sword for BC. So on one hand, there is actually a chance of precipitation coming into the southern portion of the province, effective really starting late this afternoon. An even better chance tomorrow as the remnants of the hurricane really kind of finishes off its run into BC. So that's positive news. And we're talking about not enough to end the season, unfortunately, but probably 5 to 10 millimeters of rain within the southeast portion of the province, and somewhere between 1 and 5 mils across the Kamloops Fire Center, which is obviously where we have our Adams Complex, Bender Complex, and McDougall Creek Fire. So there is good news in terms of precipitation. The other edge of that sword is exactly what you referenced, which is the winds that may be associated with it. So we are anticipating some winds to come with this thermal air mass that's coming through, but it will not be the same as what we experienced on Thursday and Friday. A couple of different variables to that. We're not in the middle at the end of a heat wave, which is a positive thing. And the winds are not forecasted to be sustained for as long as they were last week. So we may see gusts up to 30 kilometers an hour, but they're really forecast to be generally much more mild than what we saw last week, 10 to 20 kilometers an hour, which is for August firefighting conditions in BC, that's relatively typical. So good news on the rain. We'll continue to monitor the wind as the remnants of that hurricane starts to push into BC. Thank you.
And our next question is going to come from Camille Baines from the Canadian Press. Go ahead, Camille.
Hi there. I don't know if Minister Dix is there right now for a question I have on patients from the Northwest Territories. But it is.
I think Minister Ma can take that, and her staff from MCR may be able to assist.
Okay, thank you. Could you tell me how many patients from the Northwest Territories are currently in BC and whether more are expected?
Yes, so first off, I want to emphasize that our hearts are certainly with the people of the Northwest Territories. We are kindred spirits in this challenge together, seeing what's happening here in British Columbia as well as up in the Northwest. So we have safely received over 19 hospital patients and 16 care home residents from Northwest Territories. They've been transferred to Vancouver Coastal Health, Fraser Health, and Providence. And we are continuing to support as we can, but also, of course, very mindful of the emergency that we are facing here in British Columbia as well.
Camille, do you have a follow-up question?
Are any patients from elsewhere in BC expected to be moved to other regions?
Yes, there is actually a significant evacuation of long-term care home patients, seniors from the Kelowna, Shuswap areas. Let us follow up with you. We'll connect with our colleagues over Ministry of Health to follow up with you on details on that.
And our next question is going to come from Lisa Yuzda from City News. Go ahead, Lisa.
Hi there, just wondering, and I know, as you said earlier or at the beginning, it's very early days, but for the rebuilding aspect of it, or I guess just putting people's lives back together after it, for people who don't have insurance coverage, whether they're a tenant or an owner, just have a mortgage. Are there supports for them, or are there going to be people who are just going to be out of luck?
So the loss of a home is absolutely devastating, and I want to emphasize how challenging this is for the people who are at risk of losing their homes yet and who have already received confirmation that their homes have been lost. I know that there are a lot of people and families hurting out there right now. In the past, federal disaster financial assistance programs have not covered losses that are insurable. So that's like fire. But right now, local authorities are assessing what is happening on the ground. We are working closely with them to get a real full sense of the extent of the damage. Unfortunately, we are not yet through the wildfire season. There are still several weeks to come. I will say that for those who have lost homes and structures, wildfire home insurance is widely available in every community across the province. I really encourage homeowners to connect with their insurance providers or to reach out to the Insurance Bureau of Canada. I have a phone number here that I can offer. It's 1-844-227-5422. But as we begin to move into recovery, as the Premier said, we will continue to work very closely with local governments, First Nations, regional districts to understand the extent of the damage and how we can best support people through this.
And Lisa, do you have a follow-up question?
And just when you're talking about people coming to visit or holiday, is it Soyuz? Like, is that south of us and that's okay? Or are you still wanting people to stay over like Castlegar, Nelson area?
So in the southeast, actually, I'm going to get Cliff to maybe comment on where the line he might recommend is here. But I will say Osoyoos is part of our emergency order restricting travel for the purposes of accommodation. I know that places like Osoyoos, like Vernon, like Penticton, they are not under active threat of major fire, but they are significant host communities for evacuees from those regions that are experiencing threats from fire. So the emergency order absolutely restricts people from traveling into places like Osoyoos, like Vernon, like Penticton, I'll say that again for clarity. Our emergency order restricts all travelers who are traveling for non-essential purpose from going into Osoyoos, Penticton, Vernon, Kelowna, West Kelowna, Oliver, make sure I have that list, for the purposes of staying in overnight accommodation. Cliff, did you want to comment on Castlegar area and further east from that?
So obviously it's August in BC. August in BC is typically when we have one of our worst 2 fire months, and this year is no exception to that, very obviously. However, the conditions in the southeast have been relatively stable. We do have fires in the southeast. And I encourage everybody who may be visiting and or traveling through the southeast portion of the province, using Revelstoke sort of as that western boundary and pushing all the way to the Alberta border. Just encourage everybody to download our app, make sure you're paying attention to the weather, know if there's lightning forecast, know if there's wind forecast, and know where the fires are. So that if you are recreating or you're traveling through that area, one, that we can rely on you to call in potentially new fires, given that there might be smoke impacts in that area for the next number of days, but also for your own safety and the safety of your family. So really asking that everyone in BC to be prepared as an individual, whether that's at home or for travel, because it is still August. We are still going to see temperatures getting into the 30-degree range and maybe slightly higher than that. And there is still potential really across the province to have significant fire behavior. It is not the same as what we experienced last Thursday and Friday, and I just want to stress that. And so, yes, you can go to the southeast. And again, I will say, kind of using Revelstoke as the western boundary to the Alberta border, we do not have the same impacts on the landscape from fire that we do within the Kamloops Fire Center and the restricted areas.
And just for clarity, I'll give that list. Again of the cities that are specifically named in the order. So again, we've got two pieces of communication here. One is a travel communication. Don't go into the Okanagan. Don't go into the Shuswap for tourism or for fun. And then by law, Travelers will not be able to travel to stay in temporary accommodations in Kelowna, West Kelowna, Kamloops, Oliver, Osoyoos, Penticton, and Vernon. So hopefully that provides greater clarity there.
Thank you. And we have time for one more question. It's going to come from Graham Wood from Glacier Media in the room. Go ahead, Graham.
Hi, Boeing. Can you explain the importance of communications in an event like this, and then underscore from that how important social media is in your job?
Well, I mean, when we're asking people to be ready to leave on a moment's notice, when we're asking people to immediately leave their homes, that's when communication is absolutely necessary. When we're asking the public to take heed of our instructions and stay away from fire-affected areas, it is absolutely critical that we get the word out. And I do want to thank the media for assisting us in this. There's been a lot of uptake of the messages and the information that we and local governments are putting out there. Extremely grateful for your support on that. And we do use a variety of different kinds of communications. So, of course, we have broadcast intrusive alerts that push immediate information into people's phones through radio waves and on cable TV. Individual communities also have web-based apps that will provide alerts that are separate from the central BI broadcast intrusive alerting system. We, of course, do use social media. We use websites. We also, in worst case scenario, when we are doing tactical evacuations, we will send people door to door. I think that it's important from an information perspective to meet people where they're at, and a lot of people are at online, on social media. And so it is an important tool. At the same time, it is not the only tool that we rely on.
Do you have a follow-up question?
Yeah, I do. Again, for Bowen or David, Premier. Have you guys increased your advertising on social media during this time? I know that you have a ban on advertising, but you've kept it open for times of crisis. So have you guys increased your advertisement, say, on Meta or Facebook?
Thanks, Graham. Just to your first question, you know, in media events like this, our staff and our team provide high-level, provincial-level information about what's happening across British Columbia. Staff try to drill down into local areas. We are reliant on local media to help translate that into the local context for people across the province. And then for that information to be shared, the predominant way that people share that information from their local newspaper, from their local radio station, is through social media, through Facebook, through Instagram. Providing that critical link between the high-level information that the government provides, translating it for the local needs, making it as relevant as possible, and having it passed around through social media. That's why it is so important for Facebook to reconsider the ban that they have in place, that they're trying to make a political point with the federal government about. This is not a time for making that political point. This is a time for Facebook and Instagram to use the network that they built, frankly, on the backs of local media to communicate with British Columbians about what they need to hear, what information they need about what's happening in their local communities. That's why I find it so unacceptable that the ban is still in place. It feels a bit like they're holding British Columbians for ransom to make a point with Ottawa. And I just can't express how unacceptable that is when we see local companies bending over backwards to support local residents. I again urge them to reconsider that ban. And just as a provincial government, we have a principled exception on our ban on advertising on their platforms. When it is a matter of life and death, when it is critical information that has to get out to British Columbians, we are still paying Facebook to carry advertising for us because we understand it's more important that people get the information than that we make a point about their current approach to federal government laws. And so I don't know if there's anybody from EMCR that's able to provide some insight into how we're using these platforms specifically in terms of advertising for Graham's question, but I did want to make those larger points. Maybe Ian?
Premier, EMCR continues to use social media platforms through things like Prepared BC and others to get emergency information out there, not advertising specific, but making sure that we get the pertinent information out. Thank you, Premier. Thank you, Premier.
Thanks very much, everybody.
Brian Shantz, our Senator Maisie. By the way, Maisie, I told my granddaughter, whose name is Maisie as well. She said, that's why I like her. Anyway, but her name is Maisie as well. And Jill Takuda, Representative Ed Chase, and Mayor Rick Basson. Rick, when we talked on the phone, you look like you played in defensive tackle for I don't know who, but it was somebody good. But at any rate, I want to thank you for your leadership and during this unimaginable tragedy. To my left is the banyan tree, beloved by this community for over 150 years. Here in the former capital of the Kingdom of Hawaii, that has stood for generations as a sacred spot of exceptional significance. One of the people who took me under his wing when I first got to the Senate was Danny Inouye. He used to talk about the Kingdom of Hawaii. He came from Japan, but it was amazing to listen to him. Today is burned, but it's still standing. The tree survived for a reason. I believe it's a very powerful symbol of what we can and will do to get through this crisis. And for as long as it takes, we're going to be with you. The whole country will be with you. We will be respectful of the sacred grounds and the traditions that rebuild the way the people of Maui want it built, not the way others want it built. We're going to rebuild the way the people of Maui want it built. But it's going to be hard. America's deadliest wildfire in over a century. And Jill and I have what's left, walked Front Street, what's left of it. We've surveyed the damage from the air as well. The devastation is overwhelming. To date, 114 dead, hundreds of people unaccounted for. I remember when I got the call, my first wife and daughter, I was a young senator, and I got a call in Washington. I hadn't been sworn in yet. I wasn't old enough. And I was hiring staff in the Capitol at Teddy Kennedy's office. And I got a phone call saying from my fire department, and a young first responder kind of panicked, you got to come home. There's been an accident. I said, what happened? He said, your wife, she's dead. Come home, come home. The tractor trailer had broadsided her and killed her in a car accident along with my little daughter. And I remember all the way down from Washington home, wondering what a lot of people here are wondering. What about my two boys? How are they? They were in the car. I never got a read on that. Were they going to be all right? They were badly injured. Were they going to make it? Had they made it? Wasn't until I walked into the emergency room that I saw that they were there. the difference between knowing somebody's gone and worrying whether they're available to come back are two different things, you know. And I remember one of the people who helped me the most was Danny Inouye. He helped bring me back, so I know the feeling that is many of the people in this town, this community, that hollow feeling you have in your chest like you're being sucked into a black hole, wondering, will I ever get by this? You know, and it's one thing to know, but it's quite another thing to have to wait to wonder whether your family member is going to be okay. Imagine being a parent wondering whether your child is, where he is. I remember, as I said, you know, press reports of grandfathers crying for lost neighbors while trying to be strong for the ones who survived. Of a woman distributing clothing to survivors who says she didn't lose her home, but she lost her hometown. But I also want all of you to know the country grieves with you, stands with you, and will do everything possible to help you recover, rebuild, and respect culture and traditions when the rebuilding takes place. My administration has been in constant contact with the governor and congressional delegation and local leaders. As soon as I got the governor's request, I signed the major disaster declaration that mobilized the whole of government response, which means whatever you need, you're going to get. For example, the Coast Guard and Navy immediately supported maritime search and rescue operations, while the Army helped fire suppression. Here's what we've been doing since. First, we focused on search and rescue, which is still going on. Right now, there are over 450 search and rescue experts working round the clock. Second, I've identified FEMA's Administrator Griswold to lean forward, as she always has done, to help survivors get immediate aid. FEMA's quickly provided 55,000 meals, 75,000 liters of water, 5,000 beds, 10,000 blankets, working to help remove the debris, repair roads, and restore power. Additionally, my Department of Housing and Urban Development is working with the state to make sure survivors can move from emergency shelters into temporary housing to finally have a permanent place to call home as well. Small Business Administration is making low-interest federal disaster loans available to Hawaiian businesses, many of them we've seen here burned to the ground, homeowners and renters, and nonprofits. If you need help, you can visit FEMA's Disaster Recovery Center at Maui College or go to disasterassistance.gov, disasterassistance.gov. Today, I'm appointing Bob Fenton, who's here. Where are you, Bob? There he is. I'm appointing Bob Fenton as our Chief Federal Response Coordinator for Maui to lead our long-term recovery work. He's one of the nation's most experienced disaster response and recovery experts in America. And I'm directing him to make sure the community has everything the federal government can offer to heal and to rebuild as fast as possible. And we're focused on what's next. That's rebuilding the long term, rebuilding for long term, and doing it together to help get us back on our feet, to rebuild the way we want to rebuild, by making sure your voices are heard, by respecting your traditions, by understanding the deep history and meaning of this sacred ground, and establishing your community not to change its character, but reestablish it. We're also going to bring the capabilities to help you rebuild so your critical infrastructure is more resilient in the future. All this matters. Let me close with this. From stories of grief, we've seen so many stories of hope and heroism, of the aloha spirit. Every emergency responder put their lives on the line for us, save others. Everyday heroes, neighbors helping neighbors, Native Hawaiian leaders offering solace and strength. And this banyan tree, one called it the diamond in the rough of hope. Another referred to fire cannot reach its roots, what he said. Fire cannot reach its roots. That's Maui. That's America. And to the people of Hawaii, we're with you for as long as it takes, I promise you. May God bless all those we've lost. May God find those who we haven't determined yet. And may God bless you all. May God protect our troops. Now I'm happy to turn this over to the Governor, Governor Green.
Thank you, Mr. President. Before my formal remarks, which are brief, I wanted to say that I was deeply moved by the President as he shared with us by phone about his experiences of loss and how Senator Inouye helped bring him back, and how as time has passed, he's back here with us in Hawaii. You could feel a deep, deep commitment to playing that forward and caring for our people. So, thank you, Mr. President. Friends, we've been through so much together in recent years. We had 3 years of the COVID pandemic, which left us isolated. We've had volcanic eruptions in 2018 and 22, which ravaged Big Island, and there are scars here in our people's lives from opioids and homelessness. But none of this has been as tragic as the fire in Lahaina, which over these past 13 days has come down on us like a mountain. The amount of loss we've experienced in such a short time will be difficult for us to even fathom, but we'll hold each other up. Our hearts are broken and we'll heal. But with the assistance of President Biden, the federal government, and the love and compassion and resources throughout our state, we know we have the support to lift us up as we find those who are lost. We'll deal with the tragedy. The President, within 6 hours, met our needs with the federal movement. 6 hours. I don't think that's ever happened before. So it's our deepest appreciation to you and Dr. Biden. Thank you. The people of Lahaina will need time, we know, to heal, to recover, to grieve. And thank you, Mr. President, for understanding that and for sharing, as we've shared, that Lahaina belongs to its people, and we're committed to rebuilding the way the people of Lahaina want. We want to emphasize that again. This land is for the people of Maui, and it's reserved as they return and rebuild. So we've instructed, with the wisdom of the President and the wisdom of other first responders and FEMA, to reach out to our Attorney General and enhance criminal penalties for those who would take advantage of our victims. She will share more about that in coming days. Right now, I want to speak to the world. And when I say this, of course, no one can travel to West Maui right now. We will share when that is possible again. Only returning residents and authorized emergency relief workers should come here now. But all of the other areas of Maui, friends, and the rest of Hawaii are safe. They're open, they're available. The mystique and love here, the aloha, is here for you. And the reason I say that is because when you come, you will support our local economy and help speed the recovery of the people that are suffering right now. The thousands and thousands of family members that may have had loss who will still have to care for the others that remain. Briefly, to support those who have been affected by the fire, the American Red Cross has stepped up. Please support them. They're supporting our people. The Hawaii Community Foundation, again, another place you can lean in. We will assure that those resources go to the people that are suffering. Finally, there may never be another time in our state's history, ever, when we need to summon the spirit of aloha as deeply as we summon it today. So for the good of everyone who has been impacted, share aloha. Thank you for making that a part of what we are. The world is watching, and we will show them the true strength of our culture, our people, and all that we believe. And as they watch us heal, protect, and nurture one another, the world will be reminded why it loves and embraces Hawaii, and we embrace it. Aloha. Got too emotional. Next, I'm honored to introduce Brian Schatz, a dear friend and our senator.
Aloha. Although we wish the circumstances were different, we do want to say mahalo to the President and the First Lady and welcome for making this historic trip in our time of need. We in Hawaii have been through hurricanes, tsunamis, volcanic eruptions, but we've never seen such a robust federal response. Thank you. Lahaina is one of the most special places on the planet. it. It was the seat of power for the Hawaiian Kingdom. It was a whaling town. It was a plantation town. And most recently, a vibrant, multicultural coastal community. And it was gone in an instant. These fires have completely devastated families and communities, and the loss is unimaginable. We mourn parents, grandparents, and kids, aunties and uncles, friends and neighbors. To the first responders who put their own lives at risk to save others, and to everyone on Maui who has been working around the clock to help this community while your own lives have been turned upside down, mahalo. Please know that we are going to do everything we can to get you the help that you need. This is the deadliest natural disaster that Hawaii has ever seen, and as a result, this is the biggest federal response that Hawaii has ever seen. But we will need more support from everyone. The Maui community will pull together and chart its own future, but the scope of this tragedy means that we will need everyone in Hawaii and across the country. The work will continue, and we will be there every step of the way. I'd now like to introduce my partner in the United States Senate, Mazie Hirono.
Mr. President, First Lady, thank you so much for being here to listen to the local people and to see for yourself the devastation that will require a lot of federal resources. Mr. President, you and Vice President Kamala Harris were among the first people to call me in the early days of this growing disaster. And the fires that raced through this town consumed practically everything in its path. Lives were lost. Our hearts go out to all of the people who lost loved ones and who lost everything in a matter of minutes. I was at the County Collection Distribution Center earlier this morning in the Sears parking lot. And what this devastation has led to are the people of Maui coming forward to donate their time, their resources, their homes to help their neighbors. And I even saw tourists who were helping, volunteering at this center, at this collection facility in the last days of their vacations here because they know that their help would matter. And of course, the federal family of agencies, starting with FEMA. Bob, you have been through many of these disasters. You are a person who will help us recover. So all of our family of federal agencies, FEMA, the Department of Defense, Interior, HUD, Army Corps of Engineers, SBA, they were all here from the very beginning to provide the help that we need. And my hope is that Lahaina and Upcountry will rebuild in a way that we will listen to the people here. And that hope is represented by this banyan tree that stands here. Well, all around things burn, the banyan tree stands, and it is a symbol of hope. And when I talk with the arborist who is here to make sure that this tree survives, he said that the tree will tell us what it needs, and our job is to listen. And that is our job, to listen to the people of Maui, to listen to the people of Lahaina as we rebuild. Mahalo nui loa to all of you who are here, and most especially to the President, First Lady. We will rebuild, and we will rebuild listening to the voices and the values of the people here. Now I turn to Jill Takuda, our newest member.
Thank you, Senator Hirono. You know, we all stand here and we can feel the intense heat coming down on us. And I can tell you, it breaks my heart to think about just how hot it was here to do the damage that we see less than 2 weeks ago. All of our hearts breaking for what has happened here and the loss that we've experienced. Mr. President, First Lady Biden, mahalo, not only for your presence here today, but for the love and aloha you have shown our Maui Ohana from the very, very beginning. Your actions from the earliest days of this tragedy, your visit here today demonstrates your commitment and connection with our local community. This is a national disaster. It will demand a national response. You being here with us, connecting with our community, makes that absolutely clear. The banyan tree that we stand in front of has become an iconic symbol of our heartbreak and our hope. The pain we feel as we recall happier times under her branches, our undying hope that under the charred and scarred exterior, there is still life and renewal. And while this tree is a symbol, her roots, our people, have been scattered far and wide. And while we go here and we look and we search, we know that so many of her roots, her people, still wait here to be found. Others, not often seen, are in places like the beaches of Honokavai, the homesteads of Leali'i, gathered in shelters in our communities, clinging together. I have spent time among her roots, our people, spread out across Maui. And like the urgent care and attention being given to our beloved banyan tree, her roots, our people, need that same urgent care and attention. They need everything from basic identification and documents, tents and water trailers, mental health care. We can heal the body, but this takes so much longer to recover from something like this. Basic Wi-Fi connections, air quality monitoring and testing, especially for many who still live in and around these areas. The needs are great, but so are the struggles of courage. I've sat and hugged a wife still looking for her husband till this day. I've heard of a child who does not want to leave the ocean because he thinks the fires will burn him. And I've seen the fear on the face of a survivor in their eyes because the wind blew too hard, and it took her back to that moment. We know some of our most difficult days still lie before us. It's going to be long. It's going to leave us feeling heavy with loss, frustrated, angry that we can't move faster. But if our roots, our people, are to not just survive but thrive, if there is to actually be renewal and life beneath these scars, these burns, then we must all draw, as has been said, on the wisdom of our kupuna and the lessons that they have taught us to live and lead with aloha and lokahi. We must remember that our strength is in our connections to one another, our ability to communicate and care with each other. The challenge we face before us will no doubt test our aloha. But if there's one thing I know absolutely 110% for sure, aloha always wins. Mahalo. I now bring up Mayor Bisson for some words.
Mr. President, Dr. Biden, First Lady. Aloha winala kako. We are hurting because so many have lost so much. We are hurting because we know we have changed forever. We are hurting because not only we've lost our historical places and our homes, but we've lost our loved ones. This is a historical town. There's much to be learned from this place. Just behind me is the Pioneer Inn here on Maui. My mom worked there for 17 years. In the 70s and the 80s, I would spend much time here with her. That courthouse there is the original Lahaina courthouse. As a young prosecutor in 1987, I started my career in that courtroom. There's much memories for all of us, and that's why we hurt, because we don't have those anymore. But what we do have is help. All the help that's been mentioned by every person standing here, and more importantly, the heroes there facing horror and going after that. And that's the reason we can move forward. It's because we have the help. The community has come together. And when I say community, I mean the world's community, not just Maui, not just Hawaii, not just the United States of America, but all countries have come forward to help us. We've brought that together. So what that leaves us with is hope. We have hope that we can put this together as we comfort those who have hurt so much and we try to heal. And so again, I'm here on behalf of the people of the county of Maui, Molokai, Lanai, to thank every one of you who have given to us, who have donated, who have offered their services, and especially the leaders behind me, who in each of their own ways have also helped us. And I want to just say how responsive the president has been. He called yesterday, asked for the help we needed. We talked a little bit about that, and within 2 hours, one of his cabinet members called me back to answer my question. So we've been getting all the help that we need, again, because we want to let our people know that there is hope. Mahalo.